See what the bid looks like around that. Is the front end actually okay? Is it the longer end that we maybe need to be focusing on as well? We're going to get data out of Europe over the next couple of days on inflation as well, which I think is going to be fascinating as we build up, obviously, to the big inflation number on Friday. And I do wonder, we were talking about this yesterday, you're a portfolio manager. What do you want to do this week? Do you want to bank some of the profits you took last week? You've got a big number coming up which you can't trade Friday. What do you do in this kind of scenario? I think there's going to be a lot of hand sitting over the next day.
Yeah, there was certainly a lot to digest last week, wasn't there? There was plenty of news flow to take on board last week, and perhaps markets just sitting with that for a moment. Markets are open then in Europe, 10 seconds into our European trading day. And European equity markets looking pretty sluggish this morning, yet to get, there we go, down 0.1% on the Stock 600. The FTSE 100 down by 0.2%, and the Xetra DAX just a little in the green, but really not by much. US futures do point a little higher, up by 0.3% on Nasdaq futures. E-minis up by 0.2%. So, of course, we'll watch for that. But the PCE data is the data point of the week to watch out for, isn't it? And we don't have a huge amount on the macro front before that. We do have Catherine Mann speaking to us, and she has been speaking overnight as well, talking about the decision last week around moving from a hawkish to a hold position as being finely balanced, and that really ties into the sort of global inflation themes that we've been discussing.
Yeah, I think she's trying to, as you were saying earlier, maybe trying to pitch her hold as a more hawkish hold, which I thought was fascinating. She's clearly still unconvinced and sitting on the fence on that one. But you're now getting the reaction, I think, in the States as well to what Powell had to say, and it's interesting to see what Bostic's had to say. Others, even the more doves, I don't think are sounding that dovish in some of the commentary. Austin Goolsbee, very dovish. Even he's sounding a little bit cautious. He's still sticking with 3. I don't think he's a voter, but he's still sticking with 3. So I think the mix is going to be really interesting. The risk has got to be still kind of 2-3 rather than 3, I think, at the moment.
Does that change at least the nominal yield story? We had Ralph Preuser earlier saying, oh, these 3 cuts are priced in. It's already in the market. I don't think everyone would agree that the cuts are priced into the market. I think we're still waiting to see what that is, simply because if the cuts were priced in the market, would you see a lower yield? And would you see that reflected into this equity market? What is the relationship between the bond story, the miner story, for example, which, by the way, is dragging the market down this morning, or even the tech story that we've seen, that relationship so closely knit? Yeah, the basic resources sector, to your point, Guy, earlier, down 0.75% this morning, so reflecting that weakness in iron ore prices and others. Autos and parts, the best performing sector.
LVMH is up on the back of that upgrade that we've been seeing in the market this morning. Joe was bringing us that a little bit earlier on, so we'll see what effect there. UBS is also tracking higher. I think Immerse is speaking this morning. In fact, I think he's speaking about now. So we'll see what Sergio has to say in terms of how his business is progressing. This is an execution story now, so the market is eager for updates. Which is getting fairly regularly from him. He seems to be delivering a number of these kinds of speeches at these kinds of events at the moment. So the information is coming thick and fast in terms of how UBS is performing. But its stock is certainly on the it's certainly on the up this morning.
We see moves lower in Atos. Atos falling by 8.9% or so in Paris after expanding its restructuring talks. So we started the programme with this story, didn't we, Guy, talking about all of the French themes that are resonating this morning. And here's a business that's been troubled for quite a long time, a lot of debt, and going into these restructuring talks then with creditors.
What do the restructuring talks look like? Is this some sort of debt for equity? What ultimately comes out of this? Who will be in there? I don't know. I think there's a lot of things that are on the table at the moment. Its largest shareholder is potentially indicating that it is prepared to deliver a full recapitalization. This after a series of sales, one to Airbus, has not gone through. How does the French government augment this as well? So I think there's a number of different stories around all of this.
There are, and I'm going to add just one more if I can, because this is a story that's watched heavily and read very highly in the Bloomberg terminal, and that is around Donald Trump's kind of change of fortune, quite literally, over the last 24 hours. The reason I bring it up is because we are still in that period where pre-market trading opens at the same time as the European markets, and his kind of SPAC merger, DJT is the ticker, higher by 13% in the pre-market.
His wealth increased by $4 billion yesterday.
Yes, he's officially now one of the. I know he's officially now one of the 500 richest people in the world, according to the Bloomberg Billionaires Index.
One of the reasons was the bail got lowered, didn't it?
Yes.
The bond got lowered, and we had this SPAC going. And this has got classic meme stock written all over it, hasn't it? This is not going to be traded on the fundamentals. And is this stock almost going to become a barometer on his political fortunes and how he is doing in the run-up to the election?
It already trades that way, doesn't it? And I think the takeaway for a European audience especially is the fact that when we're talking about his finances, paying attention, it wasn't all good news for him in the last 24 hours. His criminal trial was also scheduled for April 15th. And this is a big deal in terms of the fact that he still has a little bit of a cash crunch. He can't actually access these shares for another 6 months. So
potentially, if the board signs off, potentially he may be able to sell some of them earlier.
We'll see.
We'll see exactly what happens there. Let's talk about how stocks are performing more broadly. Yesterday, we had the opportunity to talk to Sharon Bell of Goldman Sachs. Take a listen to what she had to say.
In our view, there are a lot of investors that are looking to broaden out some of their exposure, and you've seen that in the last week or two, some of the laggards of the market picking up a bit. And I think maybe European valuations to the US don't close, absolutely not, just narrow that little tiny bit. Also, European valuation, if you look at, say, just a basic PE, is long-term average. And at this point in the cycle, when growth is improving and when rates will eventually come down, you'd expect the valuation to go a little bit above average.
Fabiana Videlli, CIO of Equities Multi-Asset Sustainability and Multi-Asset Sustainability, joining us from M&G Investments. Good morning. Nice to see you.
Good morning.
Equities continue to rally. Everything looks great. What are you? Where are you? Where's your mind at when you think about what you want to do in terms of the investment strategy right now? You've got the Fed telling us that basically Goldilocks is here. We're going to see a soft landing. We're going to cut. It's going to be great. Do you buy into that, or are you in the skeptical camp, or are you increasingly in the skeptical camp?
So first and foremost, I thought the comments from Powell last week were really interesting because it kind of dovish tint on them, saying that they're watching the market, they're watching particularly the job market. So I see more of a balance and the possibility that even if CPI stays high, they will end up cutting because they're concerned of how fast the market can unravel. Now, in an environment where you still have I wouldn't call it robust, but I would say resilient economy also outside of the United States and interest rates coming down, equities should continue to do well, and so should fixed income. If, however, the economy starts really taking a turn for the worse, then we need to move to fixed income.
Okay. We'll wait and watch whether the data tells us that. But at the moment, what you're saying is the everything rally is on.
Equities clearly have a lot of positive underpinning them, but there are areas that are overvalued. I mean, particularly in the United States. So what we have been doing is we have been actually shifting towards markets outside of the United States. We're still, like in the U.S., certain themes, innovation, for example. Infrastructure, there is a need for infrastructure improvement. Unfortunately, we saw what has happened today in Baltimore, and also the energy transition. So there are still areas in the U.S. that are particularly attractive where we see the underpinning of earnings growth. But we do see more value in other markets.
See more value in other markets. Good morning to you. We just saw yesterday Goldman Sachs saying they're sticking with their 5,200 year-end S&P target, but they can see a scenario where we go to 6,000. I mean, are we in a period where we're going to see a lot of divergence in expectations around where US stocks go in particular? Because depending on what calls you make around the Magnificent 7 or 5, that can come up. You can come up with very different estimates of the future.
Yes, and the truth is there's going to be also a lot of divergence among stocks. One of the things that you have been seeing lately has been a shift for investors away from the enablers of AI. For example, think about the NVIDIAs of the world, the semiconductor stocks, to more of the providers, so the software providers of services. And I think that theme will continue to expand, and eventually will also move to the beneficiaries of AI, companies across sectors. So there is an evolving theme there also within innovation, and there will be more opportunities. But this is not going to be a one-time, a one-minute trade. This is going to be really a longer-term trade.
And so maybe I need to keep that in mind when I look at some of the latest data around CapEx, Fabiana, and it's easy to see a disconnect between all the AI excitement that we talk about. Businesses are going to spend have to spend a lot on developing this stuff and investing in this stuff. And yet you look at CapEx. I was looking at some research by Bloomberg Economics yesterday, and it showed the percentage being spent on CapEx was actually falling. And when you look at percent of sales spent on CapEx, we're not back up at pre-COVID levels. I don't know, does that fit with an era of huge potential for AI? If companies aren't going to spend on it, can it really deliver?
So that fits with a narrative of divergence and really focusing on what is important and where companies can spend money. So you've seen within IT, for example, there's been a cannibalization where some of the IT spend has just moved to AI, but hasn't grown overall. And that is why you really need to diversify more and to be much more selective when you're looking at stocks, even within the tech sector.
Talk to us about this tech sector, though, in terms of this breadth story. It feels like nobody's talking about these worries around breadth anymore because there's so much AI is going to hit everything. And therefore, if it's not showing up as breadth in the economy, it'll show up breadth in terms of actual end use for some of these products. Should breadth be an issue? Is concentration risk still an issue, not just in the States, but here in Europe, where we really focus in on luxury?
Absolutely. Concentration risk is an issue, and you've seen it in the, I don't know, what do you call it now, Magnificent 11 in Europe?
Sensational Six. We're calling it the Sensational Six.
So, yes, concentration is an issue. I do think that investors are starting to look elsewhere. You've seen it also in the broadening from the U.S. market to the European market. You've seen from a little bit of broadening within the IT sector in the U.S. Yeah. But it takes time, and not everything is going to rise. So you really have to just be careful to what you invest in.
All right, I'm going to play devil's advocate here because I know I went into the idea of the concentration risk may not be as big of a deal. What if it is a big deal, using some of the kind of examples we've seen around the world, for example, banking and gold companies in Canada, chip makers in Japan and South Korea? That concentration risk is quite normal in other parts of the world. Why is it creating such a risk factor here?
If for here you mean the U.S. or would the
I definitely mean Europe.
Yes. Oh, Europe. Well, it's just a matter of size, of the relative size of these stocks versus the rest of the market, right? It's the same issue that we've had in the U.S. When you have the Magnificent Seven, these are trillions that are completely, obliterating the rest of the market cap. And so any move in either direction can really be outsized. And that's the real risk. It's not only the risk of concentration, obviously on the upside, but it's how can they bring the index with them, even if they just start to slightly underperform.
Do equities look reasonable compared with credit right now? And credit has tightened up massively. Spreads are really super tight all the way down. And I'm wondering whether actually credit looks even more extreme than equities do. I'm just kind of wondering how, as you go through your meetings and you talk to other parts of the business and you try and figure out exactly kind of where you're going to put money to work, what feels the most stretched right now? As you look at asset classes on the table, what are you seeing at the moment in terms of where the most stretched valuations look?
You have a point, Guy. Credit spreads are really tightened, and actually we have started taking some profit in some areas and actually moving more towards the quality side of credit because you've started to see also corporate defaults increasing. You were talking about some issues with recapitalization just in Europe, and you've seen an increase in the U.S. In Europe is really a matter of pockets, and in equity, is a matter of pockets. Some pockets are far more pricey. The U.S. is far more pricey. But if you look at the Euro Stoxx 50 in terms of earnings yield, is actually in line with a 10-year median. So there hasn't been really that big increase in valuations. Don't forget, for a lot of equities, earnings have underpinned the recent rally.
When we're talking about earnings underpinning the rally, though, I'm curious about when some sort of correction or when some sort of crash is expected. And I don't mean that in terms of kind of bearish view, but inevitably when things go up, there's always going to be more potential for correction. Options are not hedging that possibility at all. But I'm curious if that sets up the stage for some sort of correction and what that time frame might look like.
Look, markets never move in a straight line. Sadly, I've learned that over many years. And yes, you will have some stops and starts. And particularly the biggest risk for markets is if we see a worsening of the economy that is fast and that affects earnings of stocks. We don't see that environment right now, but it is possible. Powell is watching labor numbers. Yeah. So there is a possibility. And don't forget, the increase in defaults does mean something. So that is absolutely possible. And obviously, there will be periods when the market will take a break because it has gone up so much.
Fabiana, nice to see you. Thank you very much indeed for stopping by to see us. Fabiana Fideli, CIO for Equities, Multi-Asset and Sustainability at M&G Investments. She was mentioning it. Let's take a look at them. The sensational six. We only put 6 on here because we've only got 6 spaces to be able to put on here. But as you can see, actually, all of these kind of outperforming stocks that have been at the core of the European performance story are under a little bit of pressure this morning. You don't often see that at the moment. Indicative maybe of a roll away from growth stocks. Maybe that's an interesting aside here. But you do see Nestle maybe under a little bit of pressure as well. Let's figure out what else is happening. Joe Easton is here with the details.
So these are the UK earnings we're focused on today. Ocado and ASOS. Now, both of these actually kind of rebound stories, both of them giving sales updates today. Ocado was strong. Their quarterly sales up around 10%. That's the retail business. So we're seeing that one coming up 3%. But bear in mind, that stock is already down sharply this year. I think it's down around 38% this year alone. So it's had a rough start to 2024. ASOS coming up 5% as well, the clothing retailer. The sales and turnaround are slow at that company. That's the big issue for them. But the share price is down 50% over the past year, so we're seeing it come back up. The issue is, will they need more refinancing once some of their financial issues come to the front of their problems? In terms of Flutter, this one coming up as well, as we said in Stocks to Watch, it's mostly due to the US business, FanDuel, gaining market share in American sports, and that one is having a bit of a positive morning, up around 2% today. That is the London listing, no longer listed in Dublin. Bellway, we've done it in the UK home builder space. It is one of the smaller end of the home builders, but they are reporting a sales drop today, and as such, it's down 1.5% in London, so a bit of weakness there. We'll take a look at Atos, because that is the negative one over in Paris this morning. Quite a complicated financial restructuring, but I've been reading the analysis from the analysts at Oddo, and they're saying what this will mean is a massive dilution for equity holders. The stock is already down around 90% over the past year, so it's already had a big drop. There's not much further to go. It's down another 9% this morning. In terms of the miners, you mentioned then with that drop in iron ore was down as much as 3% over on the Dalian exchange overnight. Worries about Chinese demand, and we're seeing all of the UK miners weakening today. Anglo and Rio, some of the worst performers, down more than 1% for both of those. Then finally, a couple of ratings changes to bring you. We did LVMH earlier in the session, and here it is. It's an overweight over at Barclays, actually slipping now slightly down at 0.6%. I expected that one to be higher. I think it was a little bit higher in the start of trading. But the price target, 937 euros, trading at 820. They clearly see some upside in that one. And finally, Porsche. We've got this one. I think this one is gaining. We'll take a look at the price. Only up 0.6%, not a huge move for that one, but Berenberg likes that one. They say the valuation remains discounted despite that rebound we saw following recent results. They like that one, they move it to buy, and that one's up 0.6% this morning.
Joe, thanks so much. Joe Easton from our equities team. Away from the market conversation this morning, we're also keeping a careful watch on the developing story coming to us from Baltimore. We know that around 1:30 a.m. local time, emergency calls were received that a vessel travelling outbound from Baltimore Port has struck the column of a bridge, and now we see that bridge has collapsed, is in the water. We understand there are multiple fatalities and or at least multiple suspected fatalities and no doubt injuries, but emergency responders on the scene, so we're watching this story very carefully.
They're describing it as a mass casualty incident, so that has now been declared. The reports are that potentially dozens of cars and individuals could be in the water, may have been impacted by this bridge collapsing. Critty, just give us a bit of context here in terms of where this bridge is, kind of where it sits in terms of the geography and the impact that this could have. This is clearly at the moment a rescue story. It will become more than that over the next few hours as well as people wake up in America.
It will be. So this is the first bridge to get you into the port of Baltimore, which is one of the, I think, the third largest port on the East Coast in terms of trading hubs. It's also significant in terms of what it exports exactly, because it has its largest trading partners historically have been Germany, the UK, Japan. What do those three countries have in common? A lot of car exports, and that's what Baltimore is really known for. In particular, they have a lot of union activity there as well. It's also significant in terms of agricultural exports, simply because of the railroads that go into Baltimore through some of kind of the Midwest. Think Iowa, think Missouri, for example. Some of the cornfields of America connect directly to Baltimore via rail and then are exported around the world. So from a global context, that's why this is important. The bridge itself is one of the most highly trafficked bridges into interstates when you're going between D.C. and New York. You kind of go around the city of Baltimore to avoid the inner city traffic. And that's why this is so significant in terms of stopping all the traffic, not only into the port, but around that highway as well.
So we'll continue to monitor as this story develops. As we've been discussing, this is a mass casualty incident that has been declared by the authorities. We will continue to keep you up to speed with exactly what is happening here and how the rescue operation is progressing. This will dominate, I suspect, the U.S. news cycle, certainly over the next 24 hours, I suspect for longer as well. A serious incident developing in Baltimore. We will continue to keep you up to speed with what is happening there. This is Bloomberg.
Was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and any given day it would be the head of a studio, and just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it, because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
Let me just start with, this is not the first time we've heard this argument.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome back to Markets Today. Let's get to one of our corporate stories we're covering this morning coming out of France. Atos shares are slumping this morning after the French IT firm said it's expanding talks with creditors to include bondholders as it looks to head off a looming repayment crisis. Let's get to Bloomberg's Caroline Conan, who can update us on the latest. Good morning, Caroline.
Good morning, Anna. It's been a series of nightmares for the IT company Atos that was once considered as the rising star of French tech. Last month, they had talks collapse with the Czech billionaire Kretinsky, who wanted to buy the legacy business of Atos Tech Foundations. And last week, Airbus ended talks to buy the cybersecurity unit of Atos BDS. That sent the shares down 20% in one day. Today, the shares are down again, nearly 9% at the open, and they've lost more than 85% over the past.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I'd play drums in bands and toured America with them, did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger. But drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that. We'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the fire line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal?
The Deal?
The Deal. The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything. Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Over the next 12 months, we're going to see prices of chocolate confectionery increase much more significantly relative to other snack foods, who are the main competitors for confectionery, and that will instigate a change in consumer behaviour. I've been involved in cocoa for 40 years, and I've never seen anything like it.
Steve Waters there, the head of research over at Tropical Research Services, talking about cocoa futures hitting a record, prices doubling in less than 3 months. What's behind it? Let's bring in a true expert. Megan Durison, who leads our agriculture team over in Asia and EMEA, joins us this morning. Megan, walk us through why cocoa is so expensive.
Yeah, absolutely. So the rally we've seen in this market, New York futures started 2024 right around $4,000 a ton. We're already nearing the $10,000 level. So it's truly a massive rally. There's a few factors behind it. The cocoa market is very concentrated. Most of the world's supply comes from West Africa. There was bad weather there this season, lots of rain followed by dryness, crop diseases. It's pulled down production. We're headed for a third straight global supply deficit. And on top of that, there's new EU environmental rules coming in. It's trying to protect crops from deforested land entering the bloc. That's going to make it harder to secure beans as well.
So what happens from here? Is this story now being driven by fundamentals? Is this about market positioning? How much higher can prices really go?
Yeah, it's hard to say. There was an analyst earlier this year who had predicted that we could see a peak around $10,000 a ton. Again, we're already nearing in on that level, so it's hard to say where we go from there. There is clearly, a supply shortage that's backing up the rally in this market, but you don't usually see commodity markets move this fast and furious. So it's hard to say exactly where the top will ultimately be.
And to Guy's point, Megan, does some of this depend on positioning? I understand that those who hold a lot of the physical commodity might also have sort of protective hedging in place. And as a result of that, when we've seen all this confluence of factors, you see such a sudden change in prices, there might be margin calls, for example, on those short positions. How are we expecting that side of things to develop?
Absolutely, you know, that can cause some stress here in the market. The higher prices go, the more you have, more of a margin you need to back it up. So that's going to make it difficult for all of the traders involved in this market. We have seen that there's been a decline in open interest in cocoa futures, and at the same time, the net long holding by hedge funds has been coming down. So that does show you that there is, you know, a physical element to this rally. Like people on the physical side are part of what's driving the market higher.
Yeah, absolutely. And those fundamentals around crop failure, disease, weather, aging trees still having an impact. Megan, thank you very much. Thanks for the update. Bloomberg's Megan Zirisan with the latest on cocoa prices. And cocoa's record-breaking surge is the main focus of our next episode of Bloomberg Africa Amplified. We'll take an in-depth look at what's behind the cocoa shortages that we were just hearing a little about from Megan, and why there could be a full-blown chocolate supply crisis. That's Africa Amplified next Friday. That's April the 5th at 5:30 a.m. UK time. Let's stick with the commodities story. Gold is trading near record highs, holding on to yesterday's gains as investors remain cautious as they await key U.S. inflation data due out this week. We spoke with John Reed, Chief Market Strategist at the World Gold Council, about where prices head next.
When you see short-term investors and speculators jump into the market and amass decent-sized positions, you then wonder who's going to buy next. The physical, the fundamental markets, as you say, step back a bit when prices go up a lot. So we could pause here. But like everything else, it's going to be very much determined by monetary policy decisions and communications and economic data, particularly out of the US.
Marcus Garvey, Head of Commodity Strategy at Macquarie Group, joins us now. Marcus, good to speak to you. Let's start our conversation then on gold. We were just hearing there from the World Gold Council. They obviously like it when the price of gold goes up. We've seen a lot of focus on central bank buying in this space. What do you think is the most important factor to watch when it comes to the gold price?
I think, as John was talking about in that interview there, from a very short-term perspective, it's going to be the financial flows that move kind of fastest and have the most pronounced impact on price. But if we take a little step back from that and think, well, what are the things that have set gold up to get to this position? I think one of the things that you just mentioned there, central bank buying. And then the other thing is that although consumer demand is still on a change basis hit negatively by high prices, it's also clear when we just look at the level of consumer demand that you're at now, it has adjusted to this high price environment. And so actually, if we get any pullback in price, I do think you'd find that the combination of central bank buying and consumer demand stepping back in would be supportive and will set us up for a potential move higher again later this year when we finally get to the point that rather than people talking about central bank cuts, they're actually upon us.
So that's the story around gold. I noticed from your broader notes around the commodity space, you think we're in the first throes of a cyclical upswing. It's easy to get caught up in the very obvious movements in iron ore, in copper. We've talked about those quite a lot and the structural stories they tell. Marcus, where are you looking for your most interesting trade around commodities at this point?
I think for the next sort of 6 to 9 months, you mentioned copper there, it is probably in the base metals space where things look like you could have the biggest sequential change in terms of the dynamics that we've been experiencing. If you look at what happened for much of last year versus where we would expect the global economy to be going over the course of this year. And really the key aspect there is that we do think with global growth proving resilient, the industrial sector, which has been much weaker than the services sector, is now in the first stages of a recovery. And that added to that, because we've seen manufacturing change destock raw materials. If you look at something like aluminium as well, for example, that's a clear case of this. You have the scope for both, consumption of those commodities to improve as we see industrial production pick up, and also the purchasing of them to be even stronger than that, because you do need the manufacturing sector, globally to restock raw materials, having destocked over much of the past sort of 18 months or so.
Marcus, how much of that kind of restocking narrative is driven or not driven by the EV story? It felt like for a while there, the copper moves, the aluminum, steel, even cobalt, lithium moves were largely driven by this momentum trade behind EV. Now that that's starting to lighten a little bit, are you seeing that same pullback in the commodity space?
I think EVs have clearly been part of that, but it's probably a broader thing both within energy transition and within in terms of the changes we're talking about, kind of the whole industrial space, and I'd add to that also construction. But if we just focus on that energy transition bit, actually the thing that has had the biggest impact on a number of commodities, particularly I'd single out copper and aluminium again here, has been the build out of renewables, even more so than EVs, and particularly within that solar. So that if you look at something like Chinese copper demand last year, if you were to be given the backdrop of what we were seeing in the construction sector and not given any other information, you would think that demand for copper was going to be quite weak. And actually what we saw last year was that copper demand grew by about 7%. And the major upside surprise within that really was the build out of solar, where capacity growth was up by about 150%, and the associated grid that comes with that. And that I think this year, although the pace of growth in those parts of the energy transition is going to have to slow down almost by definition, in absolute increments of commodities demand, it's still going to remain a material positive. And also within that China part, it's just worth stressing that although we're not getting a housing stimulus, we are getting an infrastructure stimulus centered on the build out of renewables, which has been very positive for certain commodities, but not for others, which partly plays into this differentiation, for example, between something like the base metals on one side and iron ore on the other.
Marcus, talk then about the positioning story. Guy was talking about it in the context of cocoa earlier with that reporter, but is there a hesitation then to even be exposed to this, given that now the strategy around EVs is a little hazy? The Chinese story also remains hazy. How are people positioning here? Take the fundamentals out of the picture.
Yeah, I think it's a very good question. If you look at the slight pickup in prices we've had to date, just from a financial flows perspective, a large portion of that is that the markets were sort of net short to neutral. In many cases, still pretty short, actually, something like nickel or palladium with the extremes. And what we've seen is that net short has been reduced, and you're now back to sort of neutral positioning in most markets. Copper's somewhat the outlier amongst the ones I've talked about, where actually the market's gotten reasonably long. So you are, with the exception of copper, where I think a lot of people still like the structural narrative, you're seeing positioning get sort of neutral, but you're not seeing a sort of broad-based willingness to put meaningful capital to work and push these markets to particularly long positioning, such as we got back in sort of last part of 2020 and really 2021, when there was a much more sort of consensus bullish narrative around the space. So from our perspective, when we think about what prices can do in the back half of this year, I think one of the key contributors to that, if we're right on the industrial cycle improving, is that will encourage more capital to come in and push prices up, so that you can have a bit of a self-reinforcing cycle between slightly better fundamentals and financial flows.
Marcus, can I go back to gold? And it kind of goes to the macro story as well. If I believe that the Fed is prepared to tolerate inflation closer to 3% rather than 2%, do I buy gold on the back of that?
Whether or not you buy, I suppose, depends on the exact starting point. But in terms of your expectations for the price, it's clearly a net positive. Because what you're implicitly saying is that you think the Fed is happy to run a lower real interest rate by being prepared to tolerate higher inflation. And therefore, in terms of the opportunity cost of holding gold, you're reducing it. So it is definitely a net positive for gold if you think central banks, and obviously really primarily the Fed, are willing to tolerate a higher level of inflation.
Does silver catch up?
Yes, in our view it does. And I think the key thing for silver there is that, one, of course, it's a precious metal, and we're talking about an environment from a rates and also kind of liquidity perspective that should be positive for precious metals later this year. But that also, on its industrial characteristics, if you look at when silver outperforms gold, it is generally when global growth is reaccelerating. And so if we're right on that call, then we would expect silver, which has been playing sort of second fiddle to gold for much of the move to date, to actually become the outperformer probably in the third quarter of this year. And by the back end of this year, I think pushing up into the high 20s, possibly even challenging that sort of $30 per ounce level.
Marcus, great to catch up. Really useful insight. Thank you very much indeed for spending some time with us this morning. Marcus Garvey, Head of Commodity Strategy at Macquarie. I want to go back to what is happening in Baltimore. The Francis Scott Key Bridge in Baltimore has collapsed. A mass casualty incident has been declared as a result of that. This is a key bridge in terms of traffic. This is a key piece of waterway leading to a major East Coast port. We'll talk about the implications of that next as well. But first and foremost, this is a rescue effort that is underway. We will update you on what is happening in the area very, very shortly. We've got all of the angles covered. This is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Markets Today. We're about 46 minutes into the European trade day. A little bit of a mixed picture when you look at those European indexes. You're seeing some individual stock stories, but a lot of the macro story dives into the data we're seeing out of the States later this week. And speaking of the States, there was one stock I want to mark in the pre-market. That is, of course, Trump Technology Group. This Trump Media Technology Group, the ticker DJT, higher by about 17% in pre-market trading. This is going to be, of course, the SPAC merger that finally came to fruition, kind of rescued a little bit of Donald Trump's finances in just the last 24 hours. It looks like moving quite higher. This is a vehicle that's not only used by President Trump, who has a 56% stake in the company, but also used as a vehicle on kind of predicting election odds via the stock market. Of course, it is largely retail driven that we see invest into this company that is largely listed on the NASDAQ at the moment. But again, one we're going to be monitoring very, very closely, higher by about 16% now in pre-market trading. I want to get to another top story that we're monitoring very, very closely, and that goes to the world's top-selling electric car maker, BYD, setting its sights on luring customers away from the likes of Toyota and Volkswagen in one of the most aggressive rounds of discounting seen in China's bruising price war. All over the story is Bloomberg's Craig Trudell joining us this morning. These numbers, what can we expect? How much insight does it really give us into this price war?
Yeah, so we've gotten an early look at just the preliminary numbers for the fourth quarter as of late January. And what we saw from BYD last year was, quarter by quarter, they were progressively ramping up deliveries. And for the first 3 quarters of the year, net income was rising sort of commensurate with that. We saw that sort of break in the fourth quarter and a drop, at least sequentially, in net income. So what we're seeing is the amount of discounting that they're doing, the aggressiveness with which they're bringing price down is starting to drain a little bit on profit. And I think, of course, we're only still just closing the books on the first quarter of this year, but that's a trend that may continue just based on the amount of activity that we've seen early this year, really since December.
Craig, how can this business offer such steep discounts where, we're guided towards focusing on the extent of the price cuts in this sector often?
Yeah, I mean, input costs, of course, are working in their favor. They do have, nickel and lithium prices coming down quite a bit. And remember, this is a company that doesn't just make EVs. They also are a battery maker. And so that is very beneficial to them. Having said that, I do think what we're seeing is, sort of the strong trying to get stronger. And just yesterday, we spoke with the chairman of CATL. And I think these two companies are really similar in that they're the big, companies in China that can really sort of, command, what happens with the market and put the squeeze on some of these less healthy companies that perhaps need to fall by the wayside.
When you sat down, I asked you about whether or not BYD could go in the States. You said that's probably unlikely, but it could find a footprint in Europe. Are we going to see similar discounting that we're seeing in China with BYD in Europe, and what impact could that have?
Yeah, I actually think that, the investigation that we're seeing in the EU into subsidies, the way that China has subsidized its car industry, will lead to tariffs. I think the writing is sort of on the wall there. I think the question is going to be just how conservative have some of these companies been in pricing their cars, in trying to avoid an action like an investigation, an anti-subsidy investigation. They weren't able to avoid that, but perhaps now they have some room to bring price down in the sense that they were trying to avoid undercutting, every electric car on the market in the EU to try and ward that off. Now that they have, failed to do that, yes, they will have some tariffs working against them, but they potentially have some room to bring prices down and sort of, account for that to some extent.
We'll bring you those BYD numbers as they hit the Bloomberg terminal a little bit later on. Craig, thank you very much indeed. Bloomberg's Craig Trudell. We've been bringing you pictures over the last hour or so of what is happening in Baltimore. The Francis Scott Key Bridge has collapsed. It has been hit by a cargo ship, which reportedly is Singaporean flagged. Let's get the latest now. Bloomberg's Derek Warbank joins us. Derek, do we know how this happened? Do we know why the ship struck the bridge and why it had such a devastating effect?
There's a lot of details still coming in. We're trying to understand now, but I think we'll get some more details on that to come. What we do know is that this vessel has reportedly impacted the Key Bridge, which is a major thoroughfare in Baltimore, Maryland. As you can see, the images, they speak for themselves as partial collapse of the span. Large portions of the span are in the water at this point. As I say, this is a major thoroughfare when you're talking about the D.C. to New York corridor. This is a heavy bridge. It's used by commuters. It's used by freight operators, and so this is going to be a major snarl for all sorts of commerce in the area. In addition to that, it's going to be potentially a mass casualty event. The details of that are still very much uncertain, but local officials are saying that that's the way that they're preparing right now. Rescue operations, I should say, are underway. Those are the details, as I say, that we have right at this early hour. I would expect more of those details to come as the U.S. begins to wake up and we hear more from local authorities.
And of course, we are getting a lot of social media messages from those local authorities as they are all talking about those rescue efforts, asking us all to be patient as we wait for those updates. Derek, talk to us about what we know about the ship itself.
Well, there's still a lot of reporting that I would say is going on about that. It's cargo ship coming through the channel there. It's a major shipping channel, so it's not unusual to have cargo ships running through in that direction. I think at this point, one of the big things that we're waiting to see is what the impacts are going to be in terms of environmental impacts there, in terms of spills in that sort of critical waterway, how long that's shut down there. But I think, as I say, primary concerns at this point are on the human impacts of this, and then additionally on the, I think, major economic impacts that this is going to have for the city of Baltimore, for the state of Maryland, for trade in that corridor, which is really, it's not insignificant. It's quite a lot. The major commuting span there, and this sort of thing is going to be a very long and a very expensive endeavor to try and repair so that it's in working order again.
Derek, thanks very much. Thanks for the update. Former Baltimore resident, Bloomberg's Derek Wallbank, joining us there from Singapore, and we understand that's where the ship was flagged, Critty. We are, of course, alert, as Derek said, to what impact this has had on the water itself, also the people in the water. We understand as it could be a mass casualty event, and there is concern about some of the people who were working on the bridge at the time, as well as the people in the ship and people who were in cars.
I mean, it is, as Guy said earlier, a mass casualty event. This is crucial in terms of the rescue efforts, but the economic impact, as Derek was outlining, is pretty huge as well because it's so close to D.C., because it's that kind of thoroughway to New York as well. This is a major spot in terms of the East Coast and how not only people get to work every single day, but how even government workers are kind of get around in the area, not to mention the unionization that happens around it. In those live pictures that we were showing earlier, you could see the cranes in the background of the Port of Baltimore in the harbor there. So this rescue operation is just step one in terms of a much longer recovery process for the area.
It's unclear about, at this point, how many people are in the water. I've seen reports of up to 20. I've seen reports of 7. So I think we are in a situation where actually we don't know at the moment. And as Anna was saying, the authorities are urging people to be patient in terms of what is happening. We still don't know a lot of the details. As Derek was saying, the US is still waking up. It's very early in the morning. It's just approaching 5 o'clock in the morning on the East Coast. So I suspect we will get more details over the next few hours as maybe daylight provides a little bit more clarity. But the early images are staggering.
Yeah.
This is a substantial span that has been felled incredibly quickly by a large container vessel hitting one of the supports.
And we don't know the cause, and that will be the thing that everyone is asking questions about. What led this ship to hit this support on this bridge and to cause such damage in such a quick space of time? So we will certainly be watching for any further updates there. That's the big news story of the day. Is some of the key data that comes out today, 12:30 UK time, durable US news cycle. From a macroeconomic perspective, there's going to be other things we're going to focus on here at Bloomberg as well. So we're going to certainly be hitting some of the key data that comes out today, 12:30 UK time, durable goods data. Just going through a few of these for you. We've got a note auction coming up a little bit later on, US 5-year notes. I know we've got an auction there, and we're going to be hearing from Catherine Mann shortly. So that's where our programming goes next. We're going to be hearing from Catherine Mann talking about what caused her to change her view on inflation and the inflationary risks in the UK economy to allow her to go from a hawk to a hold when it came to the rate decision that we saw from the Bank of England just last week.
And the background is crucial because all of a sudden off those comments you're seeing a slew of people say, does the BOE go first at a time when the BOE was supposed to be dealing with the stickiest pieces of inflation you're seeing around the world?
It felt that actually Catherine Mann's decision was the news that day. The fact that she, the hawk, at the far right in terms of the committee, the MPC, had made that decision felt like the news. The fact that we no longer had anybody voting for a rate hike actually changed a lot of people's views as to Critty's point when that first cut is going to come.
Okay, that is it for this hour of programming. European stocks just on the back foot this morning, down 0.1%. Not much to talk about in terms of the overall stock moves. US futures are pointing higher, up 0.3% on E-minis. NASDAQ futures also 0.4% higher. We'll leave you with the pulse. They'll take that Bank of England conversation forward. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
Wow.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Now, also on the show, another exclusive conversation. We speak to the new chief executive of Citi UK, Tina Lee. Now, first thing is first, let's just look at what the markets are telling us. European markets, I guess, still trying to find a catalyst. That follows stocks in Asia a little bit mixed. Cautious trading, I think, is what we've seen since the start of the year. Traders, again, positioning ahead of that quarter end, and also the Federal Reserve's preferred inflation measure later this week. If we go on to cross-asset and some of the things that we're looking out for, so U.S. futures, again, pretty much unchanged. Offshore one also strengthening for a second day. This is after China's central bank reinforced its support for the currency. European stocks down. You can see NASDAQ, maybe a little bit of support. We did have a SPAC also of Trump media, making Donald Trump a little bit richer, actually quite a lot richer in the last 24 hours. And then some of the other things we're watching out for is gold. Cocoa also at a record high, but gold prices, you can see there, 2,179, so actually close to a record high. Now, the Bank of England is widely expected to cut its benchmark interest rate at some point in the summer as inflation nears the 2% target and the UK economy emerges from a technical recession. Up until last month, 2 members of the Bank of England's Monetary Policy Committee were still voting for rates to go up, while Catherine Mann and Jonathan Haskell finally changed their stance this month, opting to hold rates. Well, I'm delighted to be joined now by Dr. Catherine Mann for an exclusive conversation. Dr. Mann, thank you for joining us. Now, as recently as February, you were still backing an increase in interest rates. Why did you change your vote?
Well, it's really good to be with you, Francine. Of course, I'm actually in chilly Belfast at the Royal Economic Society annual meetings hosted by Queen's University. But I'm glad to be with you at least online. So there are really three main reasons why I thought it was time to move from a rate hike in February to the hold from last week. And they really have to do with consumers disciplining the pricing behavior of firms. These are something I've been talking about for some time. The second one had to do with a changing dynamic in the labor market between labor demand on the part of firms and labor supply coming both from households wanting to add more hours and, of course, the fiscal package associated with the national insurance that was expected by the OBR to increase the number of full-time equivalent workers. And then number three has to do with the financial market curve. And at least on these first two, there was quite a bit of progress from February to March.
So the BOE's estimate, Dr. Mann, is that inflation will fall. You've been very concerned before about underlying inflationary pressures. What's your sense now about how worrying those pressures are?
Well, I've always talked about the differences between the deceleration in goods prices, which is something that we've seen happening on account of the change in energy prices, as well as changes in global goods prices. These translate into very close to zero inflation for goods in the UK market. Now, services, on the other hand, this is the area that has always been my concern, because even now, on a year-over-year basis, services are still running at 6%. So how have I changed my view? Well, when I look at the discretionary services, we're looking at hotels, restaurants, entertainment, travel. These, in the last couple of months, have really started to soften. And those are the most discretionary things in a consumer basket. So when those start to soften, it's because people have finally decided, I'm not going to pay that much. I'm not going to go to a restaurant that is charging me this much. And that discipline, that consumer discipline, is a very important ingredient when we think about firms choosing pricing strategies. Basically, firms have to respond to consumers saying, I'm not going to pay that much. And I do see that coming through on the data for these discretionary services. So that is why one of the key reasons why I decided that it was time to move to a hold. But the second reason, and I said it has to do with the labor market, 6 months ago, when we looked at the behavior of the labor market, talking to firms, using our agent network, and using our surveys for households, what we found is that households wanted to respond to the cost of living crisis by adding additional hours, maybe a second job. And firms were willing to go along with that 6 months ago. But where we are now is that firms actually are saying, because my wage bill is pretty high, what I want to do is cut hours, and I don't want to add more headcount. So there's a disconnect between what firms want and what households would like to have in terms of labor supply. And as I say, there's this additional aspect, which is the expectation based on the OBR of the implications of the fiscal package associated with the national insurance that is expected to add 200,000 full-time equivalent workers. So you have firms wanting less and households and the fiscal policy wanting more, and that disconnect in the labor market, I think, is something we will start to observe in wage dynamics very soon.
So given all of this, and even pre this, there's been a lot of betting that the BOE will soon switch to cutting interest rates. When do you think lower borrowing costs will be an option for you and for the BOE?
Well, I think we have to remember, Francine, that the only interest rate we set is bank rate, and that's very, very short term. The rest of the market curve is based on market expectations, based on competition among financial institutions, and there has been quite a bit of easing already, even from the March vote. In some sense, we can hold bank rate for quite some time, and the financial markets will already be easing on expectations of future cuts. My concern is that, and my fundamental reason why I voted to hike in February was, and at that point, I thought that the financial markets had been easing too much relative to what I thought was the appropriate overall curve for the UK economy. I think that there has been a substantial easing even since the vote last week, and I think that perhaps markets are a bit too complacent about how long they think the BOE overall, the MPC, will hold rates. But of course, I can't speak for my colleagues, and we are going into a forecast round for May, and we'll see what the data, how the data present themselves over the next few weeks.
And I want to get back to actually what the markets are expecting in a second, but we heard both from Andrew Bailey but also Hugh Pill saying that policy would remain restrictive even if rates were cut. Real rates are also rising as policy remains steady and inflation's falling. So how do you see those arguments?
Well, again, I think that we have to put this in the context of what the financial markets are doing with the nominal rates. Those are coming down substantially, as I say, even since last week. And so embedded in that is easing regardless of what we do with bank rate. So I think we really have to recognize that the policy instrument that we have is a very short-term instrument, and the rest of the curve has to do with competition between various financial institutions, if we think of mortgage rates, for example, and overall expectations of cuts going forward. Those are expectations based on markets. We know that markets sometimes get it right, sometimes they don't. You know, we'll have to wait to see if they get it right this time.
But Dr. Mann, when you say markets are being too complacent, are they pricing in too many cuts or not enough?
I think they're pricing in too many cuts. That would be my personal view. So in some sense, I don't have to cut because the market already is. In terms of the implications of, you know, the market curve is, and mortgage rates, for example, those are the rates that are faced by borrowers. You know, bank rate is not the rate that borrowers face.
But how many interest rate cuts do you think we'll see from the Bank of England this year?
Well, I really can't say. I mean, there's a lot of year left to go. So, you know, the market's expectation is the one that a lot of people are betting money on it. So, you know, you figure that if anybody has it right, they do. But, you know, the degree to which the market curve has moved in the last, week, but even more since the beginning of the year. You know, we have 100 basis points of a swing in the market curve. And that suggests to me that there is uncertainty about, in the market, about exactly the conduct of the economy and the performance going forward. And that is, the data are unfolding with regard to the degree of strength in the underlying economy, the degree of strength or deceleration in underlying inflation. And so I think there is quite a bit of play in terms of how the economy's performance is going forward, and that is one reason why we are seeing the degree of moving up and down of the curve. And we also, of course, have to recognize that the market curve in the UK is importantly affected by the market curves and the decisions of our two neighbors, two neighboring central banks and economies, Europe on the one hand and the United States on the other.
Yeah, traders are betting actually that Bank of England could beat European and U.S. peers in these interest rate cuts, and they're pricing in 3 cuts this year for the BOE. Does that look excessive, and actually how rapid could the pivot be towards lower rates?
Yeah. So when we look at the data comparing the deceleration in inflation and underlying wages for the U.S., the UK, and the Euro area, it's a presentation that we've had in the Monetary Policy Report over the last several issues. And we find that comparison to be particularly interesting and valuable when considering not only the conduct of the UK economy, but also the potential spillovers from monetary policy choices and decisions at our, both the Federal Reserve and the ECB. And one of the things that comes out of that comparison is that wage dynamics in the UK are stronger and more persistent than the wage dynamics in either the United States or the Euro area. And underlying services dynamics are also stickier, more persistent than either the US or the Euro area. So on that basis, it's hard to argue that the BOE would be ahead of the other two regions, particularly the United States.
Right. Catherine Mann, the former Fed chair, Ben Bernanke, is of course doing this review of BOE forecasting and communication methods in response to criticism that the BOE missed a jump on inflation. What do you think should be done to improve the process at the BOE?
So the Bernanke report will be coming out at some point, and it will be very interesting to see the overall reaction to it outside. There are a lot of different elements of the forecast process. What I think is an important part of the process, especially over the last 2 years, when the economy has been hit by multiple shocks, is an understanding of how asymmetric processes work in the economy, how nonlinearities work in the economy. And many of the models that we use, and I've been on the model building side at numerous of my other jobs, most models simply tend to be linear and symmetric. That's just the way they work. They're big, they have a lot of interactions. They tend to be constructed to be linear and symmetric. That doesn't mean you can't bolt on important research that helps you understand how firms react in a nonlinear situation or an asymmetric situation. And I think thinking seriously about how to integrate partial equilibrium or firm level analysis, or how consumers react, or how deciles, different income deciles, those behaviors are different, how to incorporate that disaggregation into a macroeconomic setting. That's something that I think is worthy of more analysis within our own forecasting process.
Okay. Have you spoken to Ben Bernanke, and do you think the BOE should do dot plots like the Fed?
Well, yeah, Bernanke did quite a bit of research, speaking with many, many people, both within the bank as well as outside, at all levels, staff, all the way up to the top. So he had a very comprehensive interview set in order to understand the background of the overall process. On dot plots, I think, we do better than dot plots. We tell you exactly how we vote, and we give speeches and interviews to tell you why. So we give you a lot more information than a dot plot.
Thank you so much. Catherine Mann, always a pleasure to speak to you, Bank of England MPC member, joining us for this exclusive interview from Belfast. Now, coming up, Fed speakers Bostic and Goolsbee differ on rate cut expectations as investors await the release of key U.S. data later this week. We'll discuss the path forward for U.S. rates. That's coming up shortly, and this is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level. The way I think about culture is they call organizations superorganisms. It's a collection of people, but the collection is greater than the individuals combined. So 1 + 1 is not 2, ideally it's 3 and greater. So if you were to look at a single person, a person has a set of core values, they may have dreams and aspirations. If you kind of map that to an organization, you can also think of the culture as your core values, personal core values turn into corporate core values, your organization's strengths and weaknesses. All those things collectively combined is something that we kind of put a label on it called a culture. A culture is like a muscle memory. It's very hard to change a habit. It's very hard to just say, hey, today we're going to define our culture as XYZ. We're just going to change this way. Like, it doesn't work like that. It's a collection of people's habits that's like, again, like a super organism. So you have to like really nudge and create an iterative feedback loop. It's a slowly evolving thing. So that's why it's so critical. Like your day-to-day decision-making, day-to-day operation, everyday execution is really dictated by the culture of your organization, not by a couple of like checklists. It's not what you write on the wall. It's what you do and live and breathe every day. And that is the culture.
Right?
Well, yeah, you know, you got to be smart about this.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Well, the conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, a sweeping leadership overhaul at Boeing with Chief Executive Dave Calhoun stepping down at the end of the year. Commercial Planes Chief Stan Deal is also leaving immediately, while Chairman Larry Keller will not be standing for re-election. Now, for more on all of this, let's bring in our Bloomberg senior global aviation reporter, Sid Phillips. So, Sid, I mean, what triggered the move, I guess, is almost years of complexities and scandals, frankly. Why has it taken them so long?
So it's been a sort of, ever since January, that's when the latest sort of crisis at Boeing began, when a door plug fell off the Alaska airplane 737 MAX. And that's really been the sort of latest trigger for all this sort of soul searching, as Boeing has been under pressure from regulators, consumers, and customers. Essentially, the airlines are sort of really furious about Boeing's quality lapses, as well as how they can get airplane deliveries, because the regulators have come down hard on Boeing, and that's sort of restricted their ability to deliver new planes in terms of being able to ramp up production and everything else. And that's really been a massive trigger. And so the latest incident came up when the CEOs of the three largest carriers in the US, Southwest, United, and American Airlines, sought meetings with the board of directors independent of Dave Calhoun. And that was really the trigger that sort of spurred this management change at Boeing.
So, Sid, where does Boeing go from here?
So the new CEO has to decide what the strategic priorities are for the company and how they can sort of address the laundry list of problems that Boeing has, as well as being able to chart a course for Boeing's future. Because essentially for the aviation industry at the moment, it's at a cusp of moving to new technology and moving to greener and cleaner aircraft. And Boeing really needs to deliver on building a whole brand new narrow-body aircraft that will serve the next generation. And that's really a key for the new CEO to basically come up with a new program at the same time as addressing the current issues that Boeing has, including solving out its supplier issues, its quality lapses, certification of the 737 MAX, the 7 and the 10, which are still not certified, as well as the 777X that's been 5 years delayed already.
Sid, thank you so much. Terrific briefing, as always, from our senior global aviation reporter, Sid Phillip. Now, in the meantime, former President Donald Trump's social media startup is rising ahead of its first session as a publicly traded company after the most high-profile blank check deal in years, gaining 18% pre-market. Now, the deal basically gives the parent company of Truth Social more than $275 million of much-needed capital. This is Bloomberg.
formed a partnership with Penny Pritzker at some point to do parking. Is that right?
Yeah, so when I was working at JLL, that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, wow, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Now, U.S. executives at a business summit in Beijing are rejigging their schedules after receiving an invitation on Wednesday at a meeting with the top Chinese leader widely expected to be President Xi. Boeing starts a search for its next chief executive after a management overhaul as it seeks to reassure airlines and passengers that its planes are safe. Plus, in just a moment, our exclusive conversation with the new chief executive of Citi UK, Tina Lee. Good morning, everyone. Welcome to The Pulse. I'm losing my voice because it's been a heavy week news in terms of news flows. Now, U.S. futures, for the moment, really trying to find some kind of catalyst. If you look at cross assets, I know a lot of the focus will also be on cocoa. S&P futures, you can see gaining some 0.3%. And then stocks Europe 600, pretty much unchanged. Now, as part of Citigroup's biggest restructuring in 2 decades, the U.S. bank has appointed a new lead for its UK operations. My next guest, Tina Lee, is now the chief executive of Citi UK. She also serves as the chief executive of Citigroup Global Markets, the bank's UK-based entity that houses its markets and investment banking business. Well, Tina joins us to take a look at how her first 6 months in the role has gone. Tina, thank you so much, actually, for joining us. I mean, you have a big new job in one of the most exciting and difficult, I imagine, restructuring for Wall Street Bank. How does the UK fit in all of this?
The UK is at the heart of Citi's global operations. So for me, it's really a fantastic opportunity to come and look at what is an amazing franchise in the UK already and how it plugs into our global network. You know, no one does global like Citi, and therefore really the opportunity here in the UK is going to be quite unique. As you said, you know, we've just concluded actually the most significant management reorganization for a number of years. That is now over, which is great, which means that now we can do what we're really good at, which is executing on our strategy and, most importantly, delivering for our clients.
So what does that look like, Tina? Is it hiring? Do you see a pipeline in M&A and IPOs?
So 2 things. Absolutely, there's an opportunity. We have a fantastic franchise already, but I'm ambitious and we can clearly do more. So as part of my new role, I'm responsible for not only investment banking, but also the corporate bank and the commercial bank. So what that means is, of course, we will be looking to hire strategically, particularly in some of the fast-growing areas, such as our commercial banking franchise, where I believe we have a real sweet spot in supporting fast-growing mid-cap companies in the UK, particularly when they decide to go global into the US and into Asia. And Citi, I think, has a real sweet spot in that area. But as you said, we've actually got a very positive backdrop in terms of markets, in terms of tone. And of course, we've seen debt capital markets on fire since the beginning of the year. We've seen the refinancing of some leveraged finance transactions. And of course, what we have seen with global equity markets has meant that actually the mood music across ECM and M&A has been the most positive than we have seen for a number of quarters.
So do you see 2024 as a good year? Or a better year, certainly, than what we saw in 2023?
Absolutely. I mean, I think when one looks across at the activity, now, we always know that the road from pipeline through to execution can be long, but certainly when we speak to clients and when I engage with clients, they're way more positive than they have been in recent quarters. So it's really about taking those opportunities as they come. You know, we have to be selective with regard to the right deals at the right time, but markets are open and there's plenty of opportunity.
And do you think London is back? I know there's a lot of questions about whether, you know, Shine should IPO here because of some of the questions surrounding the ethics.
Look, London is still a powerhouse for financial services. That's not going to change. So there's, of course, been an enormous amount of focus in terms of all the structural reform that has taken place over the last few years. We need to just deliver on that. And that's really the key message for government, for regulators. There's been a lot of steps that have been taken. Alongside City, execution now is key.
But again, so how would you do that? There's, you know, there's Mansion House, there's a number of reforms, but also in trying, there's the British ISA, which we're not sure what happens at the next election to it. What do you think would really kickstart UK PLC and therefore the UK banking sector?
So, look, there's no silver bullet. Really what this is about is cumulative structural reform, which has begun. So this is like turning around an oil tanker in the UK. We're not going to necessarily see immediate impacts over the next 12 months, but I firmly believe that over the next 5 to 10 years, we're going to look back and say that actually what this government has done, what regulators have done, what the stock exchange has done with regard to reforming listing rules and the sponsor regime actually will go to make the UK a far more competitive place to do business and to allow long-term investment decisions for our corporate clients.
Tina, there's always this battle between Canary Wharf and the City of London in the battle for financial services or attracting even lawyers. I know you're kind of on the Dockland camp now. Do you think it will win over the Square Mile?
I don't think it's a zero-sum game. I think winners, at the end of the day, London is the winner. In having these two fantastic financial services centres. You will know that in terms of Canary Wharf, we've already made a long-term commitment. We're in the middle of a major financial commitment in refurbing City Tower. That's going to be concluded in 2026, so we will have, once again, the iconic building at the heart of Canary Wharf. So we're not going anywhere. I think what is really encouraging is actually all the work that Canary Wharf under Shobi's leadership has done with regard to actually regenerating the whole estate, making it more mixed use. It's great for our work colleagues to be able to go out and actually take some time outside of the office, as well as providing a great working environment. So we're very happy.
When you traveled, Tina, in the UK, what do your regional managers say they need from you or from the government? Again, it's election year, and so there's a lot of question marks on how Labour, if they were to come into power, deal with financial services as a priority.
So I've been really encouraged by, whether it is the current government or any potential future government, what the key message has been is how do we create a stable and predictable environment for our clients. So City is politically agnostic. We obviously care about the future of financial services and we care about the future of the UK economy. But actually, I've been very encouraged by both sides of the House being very open to how we can make the UK more competitive. For City, we have 4,000 people in Belfast in Northern Ireland. So for us, it's not just a London story. Actually, how we can develop the nations and regions, for us, Northern Ireland and Belfast is really our key site, but actually being able to create high-value financial services jobs for people in their local communities is also really important.
Are you expecting to start hiring again?
We're hiring selectively. So, for example, in our commercial banking business, not only are we looking to make strategic hires, but we're also looking to acquire new clients. So that's an area that I'm very excited about. So, we're not going out and hiring lots and lots of people, but we will be strategic about it.
Tina, what makes you most worried about the next 14 to 16 months? I mean, half the people we speak to say actually the UK could be a beacon of stability because of all the geopolitics and everything that's going on in the world. Others saying actually no matter what happens, the UK will be taken with these volatile markets as they don't really know where to look.
Well, I think actually the economic backdrop is looking positive. When one thinks about the outlook for inflation, we've already started to see some dovish comments a little bit earlier from Catherine, but also really from the Fed and from Governor Bailey last week. So I think the tone in the market is going to improve. Clearly in terms of growth, I think there needs to be more focus around growth and around productivity. But certainly I think as we think about the end of the year and beyond, we'll start to see growth actually build up in the UK. And I think that will be good.
And do you see it with your clients that they're ready, the chief executive, the small and medium-sized companies that you were talking about, that they're ready maybe to spend more or invest?
They're all very keen to invest. I think the challenge is, how do we ensure that they invest here in the UK? Many of our clients are global, or we have clients that are UK-based that are looking outwards. And again, that's an area where Citi can really help. We have a global network that's second to none. We're in 96 different countries. We have an incredible network. So how do we help support UK PLC do business around the globe?
And is there appetite actually for traveling? And is this outside the EU? Are you seeing patterns on where some of these business leaders want to invest in?
That's right, we are. And certainly one of the areas that I'm going to be focused on is how we can do more business in North America with our clients, but also certain trade routes. So whether that be into the Middle East, whether that be into India, into China. So there are lots of areas of activity that we're going to be focused on in terms of how we can do that international business for our UK clients.
I know in the past you've been very focused on diversity, ESG. That seems to be taking a little bit of a step back. Is it just in 2024 something that does take a step back and then comes back to the forefront, or do you still see it permeating in some of your conversations with clients?
It's still front and center in terms of our conversations. We know that transition plans are going to take a long time. We're talking about 20 to 25 years. So actually what we're focused on is making sure that we can continue to advise clients on how they can transition to net zero. It's not just about 24, it's beyond. So we can play a key role in helping those clients transition, whether it be old economy clients or, of course, those clients that are based upon emerging industries, clean energy, renewables, that will actually be the future of the economy.
Tina, thank you so much for joining us today. That was Tina Lee, of course, the Chief Executive of Citigroup UK. Now, coming up, the Chinese automaker BYD sets its sights on Toyota and VW, having already unseated Tesla as the world's top-selling EV maker. We'll tell you how next, and this is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal.
That deal. The deal.
Huge deal.
Who dug this up? What are y'all in trouble?
conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacroix here in London. So you're looking at live pictures of the Francis Scott Key Bridge in Baltimore. Now, authorities there are searching the water for at least 7 people after a number of vehicles fell into the water. The bridge was hit by a large ship. Now, Baltimore Fire Department has described it as a developing mass casualty event with retainers hanging from the bridge, making conditions for emergency responders unsafe and unstable. We'll, of course, continue to update you on the story through the day as we get more details. Now on to other news, and the Chinese automaker BYD has set its sights on luring customers away from Toyota and Volkswagen, having already unseated Tesla as the world's top-selling electric car maker. Well, BYD has cut the cost of almost all of its electric and hybrid models, with its Seagull hatchback now selling for less than $10,000. It's due to report full-year earnings today. Now let's bring our Bloomberg Global Automotive Editor, Craig Trudell. Craig, yesterday we're talking about CLAT. What can we actually expect from BYD? And good morning.
Good morning. Yes, it's going to be an interesting set of numbers. We got an indication of what to expect at the end of January when the company reported preliminary figures. And what we've seen is this trend of, quarter by quarter, an increase in deliveries for BYD. And yet, net income, it went from, gradually rising throughout the year to in the fourth quarter on a preliminary basis took a step back. And it's pretty clear what's going on here. The amount of price competition in the China market is so intense, with BYD really sort of leading the charge from this perspective, that's actually starting to have an effect on their bottom line. They are still a profitable company. They're still much healthier than a lot of the other players in that market, but even they felt the effects of this in the fourth quarter.
But how can they offer discounts?
They are not only just an EV maker, but a battery maker as well. So they make some of the batteries that go into their EVs. The fact that lithium and nickel have come down as much absolutely gives them the ability to bring some price down and not necessarily take it all on in terms of the amount of discounting hurting them. That being said, they are still feeling the effects of it. I think what sort of brings together what BYD and CATL are doing here is really viewing this as a survival of the fittest putting market forces on some of the weaker competition within that market, because as much consolidation as we've seen the last few years, there's a long way to go. There are a lot of players still left in China.
Craig, thank you so much. I know we'll talk more and more about this. Craig Trudell there. Our carts are. Now, here's what we're watching out for today at 12:30 p.m. UK time, U.S. durable goods, 2 p.m. London time, U.S. Conference Board consumer confidence, and then at 5 p.m. UK time, we also have a U.S. 5-year note auction of $67 billion. Then also later, we have the Bao Forum for Asia beginning in Asia and the Nigeria rate decision. Now on to geopolitics, and the Israeli government has called off a trip to the U.S. by senior officials. That's after Washington decided not to veto a UN resolution demanding an immediate ceasefire in Gaza, a decision reflecting a shift of approach by Washington. Well, Bloomberg's EMEA News Director, Rosalind Matheson, is with us. Ros, thank you for joining us. Israel clearly not happy, but does it make us closer to a real ceasefire, or is just Israel and the U.S. fighting?
Well, at the moment, it's just really the US and Israel arguing. What we do know may still happen is a meeting of the defense ministers of the US and Israel. But we're also hearing is that the latest talks in the Middle East have broken down yet again, that those delegations between Israel and Hamas that were aiming to get towards the parameters of a ceasefire have yet again fallen apart. So at the moment, they're still arguing over the terms of what would be the pre-terms for the terms of a ceasefire. So we're nowhere closer to getting that, despite weeks and weeks of talks and facilitation by Qatar, Egypt, the US and others to try and get that ceasefire. So above all, in all this arguing, what we know is that the fighting is going on between Israel and Hamas, that the Israeli government is adamant that they see the need at some point to go into Rafah to clear out the remnants of Hamas. Everyone's concerned outside Israel about the ramifications of that for the people who are inside Gaza, but we're no closer to the idea of what we might get in terms of a ceasefire. And so time is running out in that regard.
But would the U.S., given what they did at the UN Security Council yesterday, would the U.S. go much harder? Actually, would they even go as far as, stopping giving money to Israel to make sure that there's a ceasefire?
Well, that is the real question. Like, what else can the US do, or what are they willing to do, again, against a country which is a key ally of theirs, both economically and strategically? And a really big move, unprecedented, to say we're not going to send Israel weapons, for example. We're going to stop military or other financial aid. You can see the reluctance really to do that. They're trying to use all their powers of persuasion unsuccessfully so far, because it is a very delicate thing for the US administration and for Joe Biden, the president. How far can he push Israel, and what kind of actions can he take without risking really some blowback for himself at home?
Ross, I mean, there are a number of stories. So Emmanuel Macron is also traveling to Brazil. Is that to try and get support for Ukraine?
It's really interesting to see Emmanuel Macron at the moment, because, of course, he's releasing different things. He's released footage of his phone call, very stern, with the Russian president right before Vladimir Putin went into Ukraine. He's lecturing the Israeli administration, Benjamin Netanyahu, saying that going into Rafah could constitute a war crime. He's releasing pictures of himself in boxing garb, looking very, very masculine. And now he's off in Brazil, seeking, it seems, to persuade Brazil as part of the global south to take a more overt stance about the war in Ukraine and supporting Ukraine. He's really kind of setting himself up here as a bit of the de facto leader of Europe at the moment, and perhaps a parallel operation with Brussels, but sensing a bit of a vacuum, potentially, is saying, I'm the one who's going to be trying setting the foreign policy agenda for Europe, warning about the possibility that Vladimir Putin might go further than Ukraine, warning of the need to really build their own self-reliance when it comes to defense, and setting out his stall in all these interesting ways. So certainly it's a reflection of that.
But are people listening to him, or is he taking on that position without much sway, really?
Well, there's a lot of concern in some parts of Europe over his recent comments, which hinted that he thought that Europe might have to be open to sending troops into Ukraine. There was a lot of blowback about that within Europe, a lot of concern, particularly in places like Germany. So it's not as though that everyone's sort of supporting this self-appointed mantle that he's seeing, but obviously he says that someone needs to enunciate some policies on behalf of Europe. But the question is, does that divide Europe a bit as a result?
Ross, so we talk about the U.S. and China being at loggerheads almost every day, but then we had the story today about U.S. chief executives being asked to meet a senior Chinese official, so staying on from their trip in China, and we think they're going to meet President Xi. What does that tell us?
Well, it's interesting because he also did something similar in the U.S. around APEC, where he met with senior U.S. executives, and we're expecting that he will do the same tomorrow in China, and many of them are staying on just for that. They want to have that audience with the Chinese president. And it's interesting, it's direct outreach from Xi Jinping to these U.S. executives, again, to sort of contain that message, really, that China is still open for business, still wants to do business with the U.S. in particular. And that's because Xi Jinping has a self-interest in that. He needs his economy on a better footing. There are substantial structural problems at home for the Chinese economy. He knows, even though there are those tensions over trade with the US, over technology, fundamentally they're bound together economically, and they need each other for their own economic success. And even he recognizes that. So perhaps a bit of messaging on his behalf to these US executives, we're still a climate where you can be encouraged to come and do your business.
So interesting. Ross, thank you so much, as always, for a terrific roundup of some of the things going on around the world. Our Bloomberg MEA News Director, Rosalind Matheson. Now, coming up, the single greatest day for Donald Trump's wealth. How the former U.S. president's net worth has ballooned to $6.5 billion. We'll bring you the details next, and this is Bloomberg. You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera, and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words, and then you put a few sentences together, and one day, you might be able to write poetry.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Well, 24 hours ago, all eyes were on whether New York State would begin seizing Donald Trump's assets as a deadline passed to post a bond of around $500 million. Now, overnight, the former U.S. president's wealth has ballooned to $6.5 billion. This, as the bond he needs to pay, was cut to $175 million. Well, let's get the details from Bloomberg's Charlie Wells. I mean, it's an incredible comeback. So what impact will yesterday's decision actually to reduce Trump's bond have on his wealth?
Yeah, I mean, it was a very Trump day, right? You got the sense that there was peril in the morning, and then he ends up on the Bloomberg Billionaires Index at the end of the day. And I mean, the issue with the bond was like very much a cash crunch. So that was more cash than Trump said that he had on hand. And the concern in Trump world was that he might actually have to start selling assets at potentially to low prices. Attorney General Letitia James had indicated that she may be willing to seize assets. This was a complete reversal of that. He said that he is going to be able to post that $175 million.
So pre-market, we've seen that the Trump social media firm actually gaining quite significantly. Is there momentum behind this trade?
It seems like there is. So, this has been a 29-month process of this merger. It almost reminds me of, SPAC mania back in the day. And this is kind of Trump media merging with a blank check company. Mm-hmm. Shares, of that blank check company were up 35% yesterday. They're up about 20% this morning. And it's very much an attention economy play. It's very much tied to Trump's, attempt to regain the White House. But look, this is a company that has really struggled with profitability. They lost $49 million in the 9 months through September. Revenue of, about just north of $3 million. So really struggling there. It's very much about momentum.
Thank you so much for the terrific briefing, Charlie Wells there with the very latest on Trump Media and Technology Group pre-market. You can see almost up 20%. Now you're looking at live pictures of the Francis Scott Key Bridge in Baltimore, which collapsed after being hit by a container ship. Rescuers are searching the water after a number of vehicles fell in. The Maryland Transportation Authority has issued an alert on X telling drivers not to use Interstate 69. The disaster severs a key link on the major highway encircling Baltimore. We'll completely, of course, bring you all the latest on this as well.
cruise ship is much more than a flotilla of financials and numbers. Naftali Holt showed me around the Celebrity Beyond, Royal Caribbean's newest ship, rolling out not the red carpet, instead, the magic carpet, an example of investment that's yielding returns in several different ways.
Originally, actually, we designed it because we wanted to have a really nice platform for tendering, because sometimes we can't home port
So
destinations.
functional.
Exactly, value fractional. And then we looked at it and said, why don't we just make it a really cool feature spot where people can enjoy it beyond the functional space? And we created this bar. It went up and down.
Now, what does it take to
How
do?
about the Instagram? Can you speak about that?
I can imagine.
Instagram moment with the sunset, you're having a drink with your friends or family. I mean, that's amazing.
So what does it take to do something like this? And I'm thinking cost, engineering, time.
Yeah, a lot of effort from a lot of people. So it starts from just the design and the conceptual aspect of it. Then we need to figure out a lot of technical factors, the weight, the wind, and so lots and lots of hours of really hard work. And every time we up the game, we see that customer willing to spend more.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
To me, the strength of the economy, that's a reason to expect a ceiling on how many cuts the Fed can deliver.
I think that the Fed is going to be a bit more prudent and only start easing much later in the year.
If they're not careful, they could cut rates and we could wind up with higher yields, not lower yields.
Central banks are really coming back into focus. We're going to get those cuts.
I'm concluding that the Fed put might actually be back.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance. Your equity market positive by 0.4% on the S&P 500. What a snoozy start to a holiday-shortened trading week. It felt like the death of summer-style price action yesterday, Bramo. There's one word that sort of echoed around Wall Street: stretched. RBC, sentiment is stretched. BTIG, we're quite stretched. Just how stretched is this equity market?
It's a good question given the fact that Max Kettner, who's going to be on the show shortly, thinks there is no bubble. So he's stretched but not bubble. Therefore, what do? I don't know. Sit on your hands and hope for summer.
Julian Emmanuel saying this over at Evercore. He's going to join us on the program a little bit later. We're in the exuberance zone. I guess my question this morning, AMA, is just how irrational is that exuberance in this stock market?
Well, it's a good question. We're hearing a lot of people talk about this. Have we gone over in the sense that you talked to Bob Michael, talking about it be the mid-2000s? Well, what happens then? It's the start of potentially the bubble bursting. So it'll be interesting to see what the data shows today and if the Fed actually takes it on board or if they ignore it and say it doesn't matter, to Mohammed Al-Larian's point, to us first on Bloomberg TV and then to the FT overnight, talking about the fact that doesn't matter for the Fed because are they now going to potentially start to move towards targeting an inflation range, not a pinpoint of 2%?
Do you think it's a contrarian indicator that Marko Kalanovic is now less bearish? I mean, essentially, he's coming out and explaining how it can be justified. That basically, if you have central banks easing policy and you have earnings growth hanging in there, maybe it could be justified and sort of tiptoeing away.
Sort of basically describing where we are currently.
Correct. Did you see that?
I did see that.
I thought that was sort of interesting because he's been kind of bearish and contrarian, and I welcome the bearish contrarian feeling, but it just shows how it's difficult to be a bear right now.
AMH was talking about the Financial Times, front page of the FT. this morning. See the far left side of that? Liz Truss moment in the US Treasury market. I thought of Bramo almost immediately, who coined that maybe a few months ago. Larry Fink of BlackRock just out with his letter this morning. Lisa, here's a quote from that. A high debt America would also be one where it's much harder to fight inflation since monetary policymakers could not raise rates without dramatically adding to an already unsustainable debt servicing bill, warning of the snowballing debt hitting the US economy.
This is a no-brainer. Honestly, everyone says this is eventually going to be a problem unless rates go to zero. This is not something that people are just throwing at a dartboard. The person who was talking about the Liz Truss moment was one of the heads of the Congressional Budget Office. We're talking about people who are in the government looking at how unsustainable this is. The problem is, we keep talking about that. We've been talking about that for a while. When does it come into the price action? We've got a record 5-year auction today. My guess is we won't be talking about it tomorrow.
Just going through more lines of this annual letter, Anne-Marie, raising the prospect of a bad scenario akin to Japan's economy in the late 1990s and early 2000s as well. This is the kind of stuff that keeps coming up repeatedly on this program over the last few weeks.
Yeah, and we talk about this a lot because when you look at the budget progression, what we're going to see in the next 10 years is the top line item on the U.S. budget is going to be paying off our debt before we start to pay off our actual bills or things that society needs. More leaders should pay attention to America's snowballing debt, he writes. No leaders are going to be paying attention to that. It's election season, and then we already know next year there's going to be more debt because the tax debate is going to come full throttle to Washington, D.C. And whether or not we get Trump or Biden, on some level, those tax cuts will continue for some Americans.
We'll have that debate in just a moment with Greg Valliere of AGF Investments. I want to tell you as well that we'll bring you regular updates on the bridge collapse around the U.S. Port of Baltimore following a ship collision. Yahara is going to join us in about 10 minutes' time. Every 30 minutes or so, we'll bring you an update on that story. Let's start with the price action. Equity futures on the S&P 500, positive by 0.4%. That's the session high. In the bond market, yields of 423.56, down almost a basis point or so. We were up double digits, or rather down double digits last week. Then yesterday, we were up like 5 basis points and took half of that back. Lisa, I have to say, just looking at yesterday, what was that about?
I think basically, from everything that I read, the trading options seem to suggest people wanted to hedge their bets about rate cuts coming through this year, about any rate cuts, let alone 3. It seems like people are worried about a Liz Truss moment. They're worried about what we heard from Larry Fink, and they just want to hedge a little bit in case this Goldilocks is getting a little bit over its skis. That's really all I could say about yesterday.
Quick note on crude. Just a little bit lower, down 1/10%. WTI 81.86, Brent crude 86.64. New 3Q price target over at Morgan Stanley, $90 on Brent by the third quarter on a tight oil market. And you saw what Mike Wilson had to say. Speaking of bullishness coming from the bears, bullishness on energy names. Bullishness on energy names.
Almost everyone's talking about bullishness, not only on energy, but also commodities more broadly, which raises this question: at what point does the robust growth and the easing policy of central banks enable inflation stemming from goods and commodities, in addition to other places?
Coming up on this program this morning, Max Kettner of HSBC on why he says the stock market rally is not a bubble. Greg Valliere of AGF on our new Bloomberg Morning Consult poll. And Pooja Sriram of Barclays as the Fed emphasizes caution. We begin with our top story, investors debating whether the stock market rally has run its course. Max Kettner of HSBC remaining constructive, writing this. Risk asset valuations may be late cycle and look like a bubble, but lots of macro variables increasingly look like early cycle. Max, I'm pleased to say, joins us now for more. Max, I want to begin, not with that note, but earlier this year. You came out in 2024, looking back to a 2023 where you were very bullish and right to be so, and you made a change. You called it reverse Goldilocks. Essentially, what you were anticipating was better data, leading to a repricing of interest rates higher, and ultimately causing damage in the equity market. You got the first half of the story right, struggled with the second half, Max. Why the change?
Yeah, look, I guess, what we didn't get right was that interest rate volatility didn't increase, right? You're right. When we look, for example, at shorter dated inflation expectations, they did increase, right? We've seen January and February CPI data clearly surprise to the upside, and we have seen longer dated real rates up. We have seen the long end of the yield curve up, right? We've seen all of this, but contrary to last September, October, contrary to last February, for example, we've not seen interest rate volatility go up. And that usually is the one thing that sort of is needed to weigh on equity valuations to bring, equity multiples down and then to sort of spread a bit across the asset classes. That really is what's been missing. And to us, look, when we look at longer dated forwards, they're already at sort of 360, 350, 360. So even if we do push perhaps towards 4%, at least half, maybe 2/3 of that story is gone. So that's why, about a month and a half ago, we said, look, even after such a short time, it doesn't pay to be bearish, right? The data is way too good. You've got to stay bullish, and you've got to stay bullish on equities and on high yield in particular.
And you are bullish stocks, bullish credit. So, Max, is this a tactical call, a short-term call, a window where you think we can do okay, or is this a longer-term call?
No, I think it's at least for the next couple of months, right? It's not something where I would expect next week to say, actually, let's reverse course again, and let's say the exact opposite again. No, I do think that can go well into the second half of this year. Perhaps then, right, towards perhaps the Q3 reporting season. So in October, November, we are seeing, obviously, the US election, perhaps a bit of election volatility, but more crucially, earnings expectations then are much higher, much more challenging to beat. We might also see, perhaps the Fed and then perhaps the discussion that you guys were just having around the Fed. We might have this discussion come to the fore where, we might start to discuss, can the Fed really cut 4, 5, 6 times? Can they cut down to 4, or can they cut down perhaps even to 3? Or are they stuck at 4, or perhaps even 4.5? Or might they even have to reverse course again in 2025? That discussion, I think, for the next 5, 6 months, we can sort of forget about that, because so far I think central bank policy, particularly with regard to the Fed, is very, very binary. They either cut or not. And to be honest, as long as they cut, I think we're still going to have a great relief rally in equities and high yield and risk assets more broadly, because there is still so much cash on the sidelines.
So just to sit on that for a second, you don't think it matters whether they cut 2 or 3 times or even just 1 time? As long as they cut it all this year, that's enough to keep this rally going in a significant way. Why?
Yeah, absolutely. I think, there's those kind of charts floating around right now where people just look at December 2024 Fed funds futures versus the S&P, and this big wedge opening up, right? This big divergence opening up. I think this chart kind of doesn't make sense, because what really matters is the starting point where then the market can really start pricing interest rate cuts. Once the Fed then has started to cut once, twice, perhaps 3 times, and then in the second stage, we start discussing about, hold on, now that we are in the cutting cycle, how far is it actually going to go, right? How far are they actually going to go? That then, the second stage, will be crucial. But the first stage is simply this binary nature. It's this, are they going to cut or are they not going to cut? And there's still an awful lot of investors that are, a bit contemplating, with this revival of growth, with very easy financial conditions, there is a risk that they won't cut at all. Let's not deploy all the cash that we have on the sidelines. So I think once the fact is happening, I think there is still a lot of cash on the sidelines that then will be deployed in markets.
You said it doesn't pay to be bearish, and that makes me very nervous. It makes a lot of people very nervous, given the fact that typically a two-sided market tends to be healthier. Ed Yardeni yesterday was talking about Alan Greenspan in 1996 when he talked about irrational exuberance, and that was sowing the seeds for the internet bubble. Are we in a similar period where it doesn't pay to be on the other side of a rip-roaring rally that potentially is headed a little bit too high?
No, absolutely not. I think not. And I'm going to throw something at you that you cannot argue against with, because I've seen a survey, I think from Bloomberg, I think one of the M Live surveys last week, where you guys were asking, is this a bubble or not? And interestingly, I thought it was around 45% saying it is a bubble, and another 45% were saying it's not a bubble. I would be really genuinely concerned if you had sort of 80, 90% of the people saying it's not a bubble. I think that would absolutely validate your thesis around irrational exuberance. But as long as it's still so sort of pretty balanced in terms of the views, that to me is not really bubble territory yet, right? And in terms of the macro data, when we look at things like CEO confidence, consumer expectations around their financial situation in the future, when we look, for example, at global manufacturing leading indicators, right? When we look at now globally, central banks moving away from hikes towards cuts, where we should be starting to talk about the lagged impact of monetary easing, all of those things look much more like early cycle, not like a late stage or close to recession thing. So that's why I don't think it's really, really bubble territory. And one last point, when we look at the S&P, it's only around 9% higher compared to the peak in early 2022. However, if you look at US nominal GDP since then, it's actually up 13.5%. So you can make the argument that particularly some of those cyclical sectors that have gone through a proper earnings recession, that they really have some catch up to play on the earnings side.
Got to be careful, Max, with any survey that Bramo has access to. Just sits there clicking it, saying bubble.
Oh, you think I'm trying to skew
Just
that?
saying, you have the potential to distort surveys.
You think this is why University of Michigan doesn't call me?
Voting loads.
Is that really it? You just
Maybe. Because you'd be the
projecting,
kind of
that's what you
person
do?
that if they did call, you'd be like 10% over the next 1 to 5 years.
That's what you want to do.
Max Kettner of HSBC. Max, thank you, sir. We promised you some updates on the bridge collapse in Baltimore. Here's the first big one this hour. Maersk says the ship that it chartered caused the bridge collapse. That headline crossing just moments ago. Maersk coming out and saying the ship that it chartered caused the Baltimore bridge collapse. Bramo, that stock is down by 4% at the moment.
After a pretty volatile period, the company is saying we are closely following the investigations conducted by authorities and Synergy. Question here, it really lies with liability at this point if they did charter it, although they did say no Maersk crew or personnel were on board the vessel.
Let's get you some updates on that story and a whole lot more. Here's your Bloomberg brief. Here is Yahara Hakez. Hey, Yahara.
Hi, John. We start with a warning about graphic images. The Francis Scott Key commuter bridge in Baltimore has collapsed after being rammed by a container ship. The Associated Press reporting at least 20 people and multiple vehicles plunged into the Patapsco River. As you said, Maersk says the vessel was under its charter. The bridge is a major part of the road network around Baltimore, carrying more than 11 million vehicles a year. Motorists have been advised to avoid the I-695 interstate this morning. Florida Governor Ron DeSantis signing a bill limiting access to social media accounts for minors under the age of 14. The law would require parental permission for 14 and 15-year-olds and would force all social media users in the state to submit identification documents to verify their age. The move comes as some states clamp down on social media platforms over mental health concerns and their role in spreading sexually explicit content. And WeWork co-founder and former CEO Adam Neumann offering to buy the company for more than $500 million, according to the Wall Street Journal. It's unclear how Neumann would finance the deal, which comes 5 years after he was ousted by the board. WeWork is currently undergoing restructuring efforts to emerge from bankruptcy in the second quarter. That's your Bloomberg Brief. John?
Yahara, thank you. Was that almost a round of applause for Adam Neumann?
100%.
That was.
He won. He won the pandemic.
Without a doubt, he won the bubble era, I think. Made all that money from a company that eventually went bankrupt, and now he wants to buy it back again.
At a discount. Sell
Just
high,
absolutely
buy back
amazing.
low, cash it in the meantime, and be a rock star.
Incredible. We're calling him a rock star.
Well, he kind of exudes that feeling, where he gets up. I'm sure if Dave Ives were here.
Walking around, no shoes and socks, long flowy hair.
Exactly,
all of that. Yeah,
exactly. You
I
understand.
Totally.
Yoga.
Sure. Up next, a trial date set for Donald Trump.
I don't know how you can have a trial like this in the middle of an election, a presidential election. This is election interference. They are doing things that have never been done in this country before.
That conversation up next, live from New York City this morning. Good morning.
politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lyons deliver news, insight, and analysis from and about politics' biggest power players.
Let me just start with, this is not the first time we've heard this argument.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
It's a small bounce on the S&P 500, up by 0.4%. Looking at the bond market, yields a little bit lower, down a single basis point, 422.97. Under surveillance this morning, a trial date set for Donald Trump.
We have a man who just ruled he'd like the trial to start in 21 days or something. And I don't know how you can have a trial that's going on right in the middle of an election. Not fair. Not fair. I don't know how you can have a trial like this in the middle of an election, a presidential election. This is election interference. They are doing things that have never been done in this country before.
It's the latest this morning. Former President Donald Trump's first criminal trial set to begin on April 15th. The case centering around hush money payments he made during the 2016 campaign. Separately, a New York appeals court allowing Trump 10 days to post a reduced $175 million bond in his civil fraud case. Despite the former president's legal woes, he's still holding a steady lead over President Biden in 4 key swing states, according to the latest Bloomberg Morning Consult poll. Joining us now is Greg Valliere of AGF Investments. Greg, let's talk about our new poll out this morning. Are we narrowing the gap between the two leaders?
I think so. I mean, it's a poll you have to take seriously, John, because there were 5,000 people polled. It's still March, obviously, and a lot can change. I think there'll be 4 or 5 momentum swings during this campaign, maybe even more. But this is significant for a couple of reasons. One is the public seems to feel the economy is getting better. That's a big shift. And more people are saying they're not voting for Biden. They're voting against Trump. That's something Trump has to worry about.
When you look at the poll, Wisconsin, Biden is now leading Trump by 1 point. He trailed him in February, and then he's tying him in Pennsylvania and Michigan. How critical is the blue wall to President Biden to getting reelected?
That's a good point. I mean, you've got to win those states. What Biden has going for him, though, is money. Believe it or not, the Democrats and Biden have far more money than the Republicans and Trump, and I think that will make a difference.
How does Trump gain more when it comes to campaign donations? Do you think potentially his social media company and this merger, and they're going to start trading officially today, we see it up in pre-market, can help him? This looks like a huge windfall for him.
Yeah, it sure could help him, although, you know, the public might say he's just spending all of his own personal funds on this, and it might create a backlash. Hard to say on that. Of course, Trump has a long history of not spending any of his money when it comes down to it on his own campaigns. He finds others to spend the money.
Well, we were talking about all of these trials that we started with the former president talking about how unprecedented this is and how it's complicating his effort. Is it complicating it or actually adding fuel to his ability to raise money, since all of these trials have traditionally been fundraising opportunities?
I think it's the latter. I think he can raise money off of this, claiming that they're taking his properties away or treating him unfairly. He said we're in the middle of an election. Well, it's still March. I wouldn't say we're in the middle of the election, but he plays martyr better than any politician I have ever seen, and I think he'll do that again very effectively.
In the meantime, we're wondering what President Biden, what the ramifications will be from some of the U.S.'s policy with respect to Israel and Gaza, given the fact that the U.S. did not veto the latest resolution at the United Nations calling for a ceasefire. There's been an increasing kind of tension between the U.S. and Israel. Do you think that that will bolster President Biden when it comes to support from the more progressive wing?
It may help him with the progressive wing, but at the same time, it might hurt him in a state like Florida that has a heavy Jewish population. When you see Netanyahu and Biden not even speaking to each other, that's shocking. I mean, the Israeli-U.S. ties over the last few decades have been rock solid. Now they're not.
What do you think Biden's response to this should be, in the sense that, do you think people are going to go out and vote on foreign policy November, or is it just something that he needs to do to make sure that he's shoring up some of these smaller bases in places like Michigan?
Yeah, I think he needs to shore up bases. I'm really intrigued by the finding in this new poll that people now see the economy getting better. They're probably looking at the stock market, which has been rocky for the last couple of days. But as you know, the stock market's been pretty good for the last couple of months. I think that's a real plus for him.
Yes, the economy, do people feel like it's getting better? But if you look into the poll, people still trust Trump more when it comes to interest rates and everyday pocketbook issues. How does Biden change that?
Well, I think he's got to stay on message and talk about tax cuts for the rich, things like that. Let me just add one other really interesting wild card, and that's Robert F. Kennedy. He's probably going to announce today his running mate. I'm shocked to see in some polls Kennedy is at or above 10%. He could have a big, big impact.
Just in the around the world kind of moment in politics that we're having with you, Craig, I do want to just finish up with something a little different, honestly, that probably markets care a little bit more about in the front and center, which is the tit for tat around tech between the U.S. and China that seems to be heating up. Overnight, we did hear about China potentially banning the use or limiting the use of U.S.-produced technology in government super infrastructure. How much is this going to really lead to some sort of response from the U.S. and highlight how much this could potentially escalate into the November election?
Well, the friction is real. I'm encouraged to see that Janet Yellen is going back to China in the next couple of months, but I think there's a need for really serious negotiations. I think U.S.-China relations are another big, big wild card and a negative one potentially for Biden.
Hey, Greg, always good to hear from you, sir. Greg Valliere there of AGF Investments. More on that morning consult Bloomberg poll in just a moment. Stunning pictures coming out of Baltimore overnight. Let's get some of those pictures up now for you. The Francis Scott Key Bridge collapsing in Baltimore following a ship collision. Two updates in the last 20 minutes or so. The first coming from Maersk, the container shipping company, saying a ship it chartered caused the Baltimore Bridge collapse. That stock is negative in today's trading. This from the White House just moments ago, Anne-Marie, saying no indication of any nefarious intent in Baltimore.
Yes, the White House obviously will be getting briefed on everyone, including all the local personnel that's on the scene there. And we do know there has been a ton, given this attack took place early morning. And they're saying no nefarious intent right now in Baltimore. They're obviously going to be monitoring the situation. But this is a situation where, you know, we're talking about immerse, but people are potentially going to be drowning. This is a number of cars that fell off this bridge, and there's going to be a tremendous amount of local authorities on the scene there. And I imagine the White House at this moment will be monitoring every single situation, every single moment of the situation.
Still piecing together what happened here. I promise you another update in the next 20 minutes or so. Let's turn to financial markets just briefly. Equity futures on the S&P 500 shaping up as follows. On the S&P 500 bouncing back by something like 0.4%. Yields a little bit lower by a single basis point, 4.2316. Plenty of Fed officials speaking, Bramo. I have to say, pretty consistent with what we heard from Chairman Powell last week.
Yeah, although Raphael Bostic was interesting. He used to be the dove. Now he's the hawk by saying he only thinks one cut this year. So, you know, an interesting sort of shifting of the birds.
I know you're focused on cocoa futures as well. You see that?
That's awesome.
$10,000 a ton.
Not awesome.
I'm not sure how awesome that is to some people.
Well, it's not awesome. It's terrible.
Not ahead of
It's
Easter.
just amazing. It's sort of shocking.
My general advice is continue to seek out companies or people that are maybe one stage or two stage ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I'd play drums in bands and toured America with them, did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger, but drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that, we'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the fire line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
That sort of start to the fore, especially heading into the election.
You know what the cheat code is now in consensus? What you'll hear is this: we'll get a steepener. Okay, and basically it's a cheat code because you get to say the front end's going to rally because we'll get a couple of rate cuts,
right?
And something's going to happen at the long end, but I can't talk too much about that. But if you ask them to be specific about where they think the 10-year yield is going, that's where they start to struggle, I think, because to your point, if you get inflation starting to inflect higher, maybe just stabilizing around higher levels, you start to factor in maybe a Fed that is looking at a neutral that's got a 4 handle, not a 3, not a 2, then you're in a very different place at the longer end of the curve.
I get the sense there is a great degree of humility right now from a lot of strategists, whether it's bonds or stocks, by the wall of money that keeps flooding in. And people who theoretically could make a case for why yields should be higher are seeing the money just keep flooding in and not seeing the case to really bet against it, which really raises the question, what makes it wash out? And really, that is one of the key questions. Or will it always be there? And if that's the case, you have to reset at a different level.
We'll dig into that theoretical case in just a moment. Let's turn to foreign exchange. The euro at the moment shaping up as follows against the US dollar. The euro stronger, positive. We're at 108.63 and positive by 0.25%. Under surveillance this morning, divisions growing between Israel and Washington. The Israeli government cancelling a trip by senior officials to DC. The decision coming after the White House opted not to veto a UN resolution demanding an immediate ceasefire in Gaza. The office of Israeli Prime Minister Minister Benjamin Netanyahu had demanded the US veto the resolution. The US abstained, citing a failure to explicitly condemn Hamas for its October 7th attack. Monday's resolution marking the first time the Security Council has openly endorsed a ceasefire. Anne-Marie will catch up with the Israeli government later this morning.
Yeah, we will. Ron Dermer. And this was an individual that was supposed to be heading to the United States. This trip now suspended because the U.S. decided not to go ahead with that veto. They abstained from this vote. The U.S. saying they're very disappointed, but we've been seeing it for weeks, whether it was over the weekend, Kamala Harris's interview saying she's not ruling anything out when it comes to consequences if Israel was to go into Rafah. And then, of course, that really groundbreaking speech by Senator Schumer saying Netanyahu should be stepping down. The gap keeps widening between Netanyahu's government and the Biden administration.
Let's listen to the response from the Biden administration so far. And it goes something like this. Nothing's changed. Why the overreaction? What did change for Israel yesterday, which essentially is going to be my first question in about an hour from now. What do you believe changed? Because the US is turning around and saying, you're making a big deal of this. Nothing's changed.
Well, it's the first time the UN, even though many really question whether the UN has any authority for this, but the first time they have openly endorsed a ceasefire. But I don't know if it was just this moment. This potentially was a moment for Netanyahu to push back on all the rhetoric I just mentioned, whether or not it was Schumer, Kamala Harris. You do see they really are starting to, it's becoming more of a wider gap between these two governments.
Here's a story on Lisa's radar. I want to talk about China just briefly. A handful of US CEOs reportedly extending their stay in Beijing for a Wednesday meeting with Chinese President Xi Jinping. A list of executives invited to attend hasn't been made public, and sources telling Bloomberg there is a, quote, understanding Xi will be there. His name isn't listed on any invitation. The same tactic was used back in November when he attended a dinner with US business leaders, executives including the Pfizer and FedEx CEOs, already in Beijing for the China Development Forum, which ended on Monday. Bramo, what do you make of this?
I'm not sure. Is this going to be an outreach to try to get them to stay? Or is this going to be a really frank conversation with some of these executives about why they're unclear about how quickly and how much they can really commit to a country that doesn't seem committed to them? I mean, we look at foreign direct investment, you know, coming down for a second straight month. This has been an issue perpetually for companies that want consistency, if nothing else. So to me, it's interesting that they're all there kissing the ring. Do they get some sort of promise in response that they can bank on?
Yeah, I think things have changed, haven't they? It used to be them rolling out the red carpet for Xi. It feels like Xi is now rolling out the red carpet for them.
Maybe. Let's see how serious he is about this. He did that in San Francisco to some degree, but I am curious to see whether it's the same kind of tone, especially given the fact that all of the public proclamations by officials are pretty sanguine on the economic picture.
Whether or not what she, first off, we have to make sure she actually does intend to go and actually shows up. But it's really the optics of this. I think what he's trying to show to the rest of the world is that we want foreign direct investment. We want you to come to China. The issue is it comes at a moment when also just ahead of the Treasury Secretary set to go, according to Politico. So does this pave the way for potentially that more frank conversation he's going to have with the U.S.?
That's China. Next story, out of BlackRock, the CEO, Larry Fink, warning of a mountain of debt hitting the U.S. economy in his latest annual letter. Fink saying the nation can't rely on taxes and spending cuts to get the problem under control. More leaders should pay attention to America's snowballing debt. A high debt America would also be one where it's much harder to fight inflation. Fink saying a debt crisis is not inevitable, calling on capital markets to help grow the U.S. economy through infrastructure and energy investments.
I'm just looking at this. How do you pay for it? I mean, this is ultimately the question is, you know, first of all, there's a lot of disagreement about how you grow the economy. And then the second question is, what are proper investments to pay for at a time where it's getting more costly to borrow? It's a real debate. I'm not saying this with snark. Honestly, I don't have the answer, but this is where the debate should be in Washington, not some of the things where it has been focused.
Grow your way out of it is going to be the response we hear from Washington.
Yeah, well,
let's see how that goes.
But do you grow it out of it by cutting taxes? Does that have been proven to work?
That's going to be one offer down in D.C. from one party.
Right. Yeah. Is it going to be removing restrictions for businesses? That's going to be one party. Do you invest in infrastructure? Okay, well then how do you pay for it and how do you justify something that has earmarks?
Another party would say we tax the 700 and something billionaires that live in America and that will address everything.
Point being, a lot of people would agree on the premise, but not necessarily the resolution.
Let's get another view. Larry McDonald, founder of the Bear Traps Report, warning that the, quote, fantasy of a return to normal is unlikely. In his new book, How to Listen When and Market Speak, he writes this: an unprecedented era of easy money is coming to a screeching halt. We're about to witness a new era defined by sustained inflation, a series of sovereign and corporate debt crises, and a historic multi-trillion-dollar migration of wealth. I'm pleased to say that Larry joins us now for more. Larry, good morning and congratulations.
John, thank you.
Thank you very much for being here with us. Can we get into that? The word crisis seems to come up a lot. What do you anticipate is going to happen, and do the thoughts of Larry Fink this morning resonate with you?
Well, first of all, gratitude. I'm so grateful to be here with you guys. I'm coming up on 20 years on the Bloomberg terminal, and that's a long time. And, we have a great institutional business, and this book democratizes information for the viewers, right? And so we've been having these conversations for the last couple of years with the professional investors. And what we want to do is bring kind of the intelligence gathering that we've done around the world over the last couple of years and bring it out to a broader audience. And the bottom line is, everybody in America, everybody's 401k is set up in a 2010 to 2020 portfolio. And that was really a disinflation decade for a whole bunch of reasons. Post-Lehman, I was fortunate enough to write the Lehman book. And now this is about the 2020 to 2040 portfolio, which is, right now there's about 21 trillion, 22 trillion in the NASDAQ 100, $22 trillion in financial assets. And then when you look at hard assets like copper, aluminum, oil and gas, things that are going to really bring forth our economy to the next generation, you're only talking about $3 trillion in those entire asset classes. And that's what this is all about.
So this raises this question of how do you get the ball of money or this wall of money or whatever you want to call it, just shift in those directions, and is there enough to go around? Is there basically not the fear of massively rising yields because there just is so much cash that's been created by the 2010 to 2020 decade?
Well, this year is very political because of obviously an election year, and we've had a disinflation cycle. I guess a disinflationary moment here in the last 3 or 4 months where inflation came down. And a lot of people are encouraged by that, and so that's brought on a lot of cheerleaders. We're going back to the previous world. And when you look underneath the surface, it's a multipolar world. We've got sea lanes that aren't working properly. We've got drone attacks on refineries. This is a different world. And so the probability that inflation normalizes 3 to 4 instead of 1 to 2 is extremely high. And if that's the case, there's trillions and trillions of dollars that are basically in the wrong place.
What's going to be the wake-up call? Because we've been talking about a Fed that basically just said we're going to allow inflation to run hotter for longer. Markets don't seem to be particularly alarmed by that. When does that change?
Well, they have to think about when you have a $35 trillion debt hole, there's 2 ways out. Debt jubilee, and we've seen that going back the last couple thousands of years. Civilizations have gone toward a jubilee. We won't get into that kind of bearishness. But the other way is to monetize your way out. And so they won't tell us that that's their plan. But when you look at, say, the Fed meeting and the post and all the questions that come out of it, nobody's asking the Fed when he says higher for longer, right? When he says that, somebody has to ask, well, if it's $80 billion a month of interest, how can you stay higher for longer? At some point, they're going to have to really hold down that front end. And right now, 80% of all debt issuance is in T-bills with that kind of massive amount of debt issuance. And so you can just tell they're trying to play the waiting game. Eventually, they're going to have to suppress the front end to get us out.
That's the sovereign story. Just how well understood is the corporate story? And we have a decent understanding. There is some transparency there around the maturity wall and how much of that has already been basically taken down in the supply of the first quarter of this year. How well understood is the corporate side of the story?
Well, I just look at the super regional banks like Zions and Comerica and U.S. Bancorp. They're underperforming the S&P 500 by over the last 2 years by close to 40–50%. That's very unusual. So that tells you that there's a debt problem either in commercial real estate or in the corporate side that's out there. But the corporations did a really great job of, as you guys have shown, pushing out the maturity to 24, 25. But the problem is we have in 24 and 25, and say the next 24 months, if you add up all the commercial real estate loans plus the leverage loans plus high yield and investment grade, it's like $2.5 trillion. So that's going to be an issue probably for later on in the year.
So you clearly think there's something highly incompatible about where the market is versus where you think the regime is going to relative to where we were, say, 10 years ago. And I'm trying to work out, how do we get 10, 20 years down the road in this cycle, this new regime that you think we're in at the moment, if we've got to work through all those debt issues? I'm not sure how the two things are compatible, that ultimately if the Fed has to stay high for longer because you believe inflation is going to be a problem for a lot longer, doesn't that just address itself?
Well, typically, this kind of debt load would cause a financial crisis event. We saw that last year, right? But look what happened. The moment they smelled the Lehman moment, the Fed, they juiced the balance sheet, and they're going to basically attack any financial problem with rate cuts and balance sheet. So at the end of the day, that gets you into a weaker dollar regime, because that's one way out of a financial crisis, right? Is now they've got all this firepower. They got 5.25% of rate cuts, so they can really attack a financial crisis aggressively with rate cuts. If they do that, that gets you a much weaker dollar on the heels of what's happening in commodities. Then you're going to have the real big commodity boom.
Which is the Liz Truss moment, when all of a sudden the U.S. loses its reserve currency. This, to me, is really the key question, though. Ultimately, is this a matter of the leverage shifting away from the private sector to the government sector, and for the Fed to have to rescue the government by keeping rates lower and allowing inflation to running hotter? How hot are you seeing inflation potentially running? Are we just talking 3%, 3.5%? Are we talking about something more in the fours that really does kind of weigh on people who do go to stores and see their grocery bills picking up quite materially?
And that's the thing, is that right now the boomers control about 76 trillion of wealth. 76 trillion of wealth, whereas the millennials control about 8 to 9 trillion. So the boomers are sitting on a lot of capital. They're getting a tremendous amount of money in the banks, in the money market funds. But the bottom 30%, the bottom, say, 60%, are just being suppressed with higher inflation, and they have about $400 in their checking accounts. That's according to the New York Fed told us that, remember? So they had $400 in their checking. So it's really two economies. One economy is booming because Powell gave the wealthy boomers a 300% pay raise. The bottom 60% under this inflation stress. And then you could see this in some corporate earnings, right? You can see it in McDonald's, you can see it in pet care. And so it's two economies that are kind of fighting it out right now.
I have a feeling we'll be talking about this for a long time. Larry, it's good to see you. Congratulations on the book. It's fantastic to catch up. We're going to do this again soon. Larry McDonald there on his new book. Let's get you an update on stories elsewhere this morning, an update on the bridge collapse in Baltimore. Here is your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. We start by warning you, these are graphic images. Baltimore's Francis Scott Key commuter bridge has collapsed after being struck by a container ship in the early hours of this morning. Emergency responders have described it as a, quote, mass casualty incident, with as many as 20 people and multiple vehicles plunging into the water. Baltimore's fire chief says 2 people have been recovered from the water so far. In an emailed statement, Maersk saying the container ship Dolly was operating under its charter. The White House says there is no indication of any nefarious intent. Troubled electric car maker Lucid is getting a $1 billion cash injection from its biggest investor, which is an affiliate of Saudi Arabia's public investment fund. The U.S. company saying the new financing will be partly used for capital expenditure and as working capital. Lucid shares gained nearly 6% yesterday, though they are still down by roughly a third so far this year. Former President Donald Trump's social media company is rising ahead of its first session as a publicly listed company. Trump Media and Technology Group will begin trading today on the NASDAQ under the ticker DJT following its merger with a so-called blank check company, or SPAC. The deal gives the parent company of Trump's social media platform, Truth Social, more than $275 million of much-needed capital, plus providing a windfall for Trump as he faces a mounting series of legal and financial issues. That's your Bloomberg Brief. John?
Hey, Hara, thank you. Up next on this program, the Fed proceeding with caution.
The risk of easing monetary policy too soon or too much is that it could allow above-target inflation to become entrenched and halt the progress that we have seen.
That conversation up next. You're watching Bloomberg TV.
You formed a partnership with Penny Pritzker at some point to do parking, is that right?
Yeah, so when I was working at JLL,
that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, well, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Green World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Fascinating conversation with Larry. So essentially, just to conclude, I spent the commercial break thinking about it. We're going to have to pay for financial stability with higher inflation, right? Is that basically the trade?
And pay for a deficit that otherwise would be completely unsustainable with inflation, to inflate our way out of it at the expense of the dollar. Because essentially the Fed is going to have pressure, even though it's not political, to cut rates to bail out the government rather than the private sector, because the government is where the debt is actually.
Got it. This is pretty bearish stuff, isn't it?
It's bearish stuff, but he's not alone. And it sounds gloom and doom and kind of, end of times, but Larry Fink was kind of nodding to this.
Yeah, he was. In the annual letter to shareholders a little bit early this morning. More on that later. Equity futures right now on the S&P positive by 0.4%. In the bond market, yields lower by a basis point or two, 422.77. Out of Savannah's this morning, the Fed proceeding with caution.
The risks to achieving our inflation and employment goals are moving into better balance. The risk of easing monetary policy too soon or too much is that it could allow above target inflation to become entrenched and halt the progress that we have seen.
Here's the latest this morning. Fed officials emphasizing caution with more economic data on deck. Durable goods due today at 8:30 Eastern Time. PCE on Friday. Pooja Sriram of Barclays expecting, quote, 3 incremental cuts in 24, 4 more in 25, lowering the target range for the federal funds rate to 350 to 375 at the end of next year. Pooja joins us now for more. So, Pooja, that sounds like a little bit of a rate-cutting cycle. When I have to say, some people on the street are starting to look towards maybe just a mid-cycle adjustment of a couple of rate cuts and then wait, see, and look around. Why are you in the former camp and not the latter?
Hi, thanks for having me on the show this morning. I think 2 reasons. One is, of course, our own baseline outlook of how we think the data are likely to evolve, which was, where we were before the March FOMC meeting. We had the same expectation. We think there is a plausible path where we see inflation continuing to gradually decelerate, through the end of this year, which gives the FOMC, the right chance to, initiate a rate cutting cycle. And at the same time, we do think that there is a gradual slowdown in the macroeconomic backdrop that is quite likely. So a slowing, but, nothing more than that. And then we've always been saying that risks to this baseline outlook, looked skewed in a sense that, we could have fewer rate cuts or, more delayed rate cuts. And that was really what we were starting to see after the Jan and the Feb inflation data. What really took us by surprise is the March FOMC meeting, the press conference, the SEPs, which gave us, a little more understanding of how the Fed is thinking about this, what their reaction function might be. And, the read from all of that was that it seemed quite dovish, and it seems like, they're also looking for a window to go in there and start cutting rates. And that really aligns with what we had expected earlier as well.
Pooja, a lot of people have come on this program and said that essentially the March pivot or the continuation of the December pivot highlights that this Federal Reserve is going to be tolerant of inflation at a higher level for a longer period of time. Why aren't you seeing that really reflected either in economist projections or in market expectations?
So I think we wouldn't read it as them being tolerant of higher inflation expectations or inflation outcomes. I think what we learned from the March FOMC meeting is they didn't infer much from the Jan and February inflation prints. I think their baseline outlook remains one where they expect the future inflation prints to evolve lower. So nothing, for them has materially changed in terms of their baseline forecast from December to March. Of course, it's, a lot of participants did note that risks to inflation are skewed to the upside. So they're definitely cognizant of that. And I think Chair Powell was also clear that every meeting is live. It's going to be data dependent. So nothing in that seems to suggest that they're going to be tolerant of higher inflation. It's just that at this point in time, they still very much believe that they have a path to lower inflation, even with the strong macroeconomic backdrop, and they really believe that they will find a window to cut.
Why don't you think that a higher tolerance of inflation is implicit in the forecast? Isn't that in the SEP?
So the SEP actually has inflation coming all the way down to 2.2% by 2025. And this is despite them marking their growth forecasts higher with a very benign unemployment rate. So, that if you were to look at the projections, I think they believe that they will have core PCE inflation close to 2% by the end of next year. And that allows them, to have a slightly shallower rate path and to proceed with the rate cuts that they have projected.
So your projection is 350 to 375 at the end of next year. Pooja, could you share with us where you think neutral is?
Oh, well, so here's what we think. I think rather than looking at the long run projection for the FOMC, we, I think, tend to think that, where the 2026 median rate projection is about 2.9 is perhaps where, the policy setting should be. That's so, a slightly higher neutral rate than we had in the past. But I think the 2026 median projection is perhaps where we think the neutral rate currently stands at.
So low threes, Pooja, is basically the guess from you. So you'd still suggest that even if we come down to 3.5, that's somewhat restrictive for the US economy. Is that right?
That's correct.
Is that because you believe maybe this inflation story is going to hang about longer than expected?
It could be. I think one thing that we need to understand is, they don't need to wait for inflation to come all the way back down to 2% to actually start cutting rates. We just need to be confident that things are evolving in the right direction. And I think we'll find a window for that to happen. And a slightly higher neutral rate, I think, is a consequence of more macro fundamentals. Slightly higher productivity. We've got demographics. There's also the immigration story that the FOMC has alluded to earlier, right? Where we think that there is a very positive aggregate supply shock, something that I think they continue to expect in their baseline, which perhaps also explains why we could see a slightly higher neutral interest rate.
Thoughtful stuff. Appreciate your time, Pooja, as always. Let's catch up soon. Pooja Sriram there of Barclays on the Federal Reserve. Coming up in the next hour, Julian Emmanuel of Evercore, Bloomberg's Mario Parker, Israel Strategic Affairs Minister Ron Dermer, and Megan Robson of BNP Paribas from New York City. The second hour of Bloomberg Surveillance. Up next.
happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
To me, the strength of the economy, that's a reason to expect a ceiling on how many cuts the Fed can deliver.
I think that the Fed is going to be a bit more prudent and only start easing much later in the year.
If they're not careful, they could cut rates and we could wind up with higher yields, not lower yields. Central banks are really coming back into focus. We're going to get those cuts.
I'm concluding that the Fed put might actually be back.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The second hour of Bloomberg Surveillance begins right now with your equity market pushing higher, bouncing back by something like 0.4% on the S&P. There's the S&P 500 yesterday briefly, just snapping some of the momentum we've got on the NASDAQ, a 5-day winning streak on the NASDAQ 100, but really muted, mild stuff coming into the big print on Friday. The print we've been waiting for, and Chairman Powell basically told us what the number is.
0.3%. So this
Thank you,
is basically where we are, which is the reason why we can take the day off. So thank you. We really appreciate it.
So we get back to the equity market going into Friday, trying to figure out just how stretched we truly are. Julian Emmanuel of Evercore on the show in about 2 minutes' time. Stay tuned. We're in the exuberance zone. First question, irrational or not?
And how long can exuberance last? Longer than many people can remain solvent. This is the issue, is that a lot of people could identify something that feels like it's getting frothy, and yet it can continue for a very long time. To me, the one key question really does remain with the bond market. How long will the bond market go along with the message that the Fed intends, which is everything is under control, we're doing just fine, we're going to cut rates, inflation's going to come down? When do people start to challenge that, and does that shake some of the exuberance?
I love what you just said. We can all identify a story that sounds bad, but it can remain bad for a long, long time. And I'm thinking of the fiscal trajectory of the United States of America. Earlier on this morning, Larry Fink, the CEO of BlackRock, coming out with his annual letter to shareholders and saying this: a high debt America would be one where it's much harder to fight inflation, since monetary policymakers could not raise rates without dramatically adding to an already unsustainable debt servicing bill. Complaints this morning, AMH, a warning of the snowballing debt in the U.S.
Yep, and he says leaders should be paying attention to it. He also talks about the cost of servicing the debt, how much that's ballooned, and 3 percentage points in extra interest rate payments the U.S. government must pay. He calls that, quote, very dangerous, although he does say as well about a looming retirement crisis. He says he understands why millennials, Gen Z, are annoyed with the boomer generation like him, because they're going to be the ones that have to pay for all of this.
I will say there will be a lot of people who dismiss this. He's trying to act a politician and say, I understand, I feel your pain. We're worried about the debt crisis. It's going to be a crisis. He said this for a long time. However, PIMCO's Andrew Balls, did you see this story? It was really interesting.
Yeah, not long duration in the U.S., but elsewhere.
Exactly, because of this concern about the deficit becoming an issue. So, key question again, when does it matter? Because right now, it seems like it's under control, and people talk about the wall of money that just keeps going into bonds.
That's the market story. We promised you updates throughout this morning on the latest in Baltimore as well. So here is the latest, just absolutely stunning pictures to wake up to as the Francis Scott Key Bridge collapses following a ship collision. In the last hour or so, just piecing together what happened here, from Maersk, the shipping company out of Europe, big global container shipping company, saying the ship it had chartered caused the Baltimore Bridge collapse. So that's the latest from Maersk, saying the ship they chartered caused the Baltimore Bridge collapse. That stock has been trading lower ever since we got that headline about an hour ago. And in the last 30 minutes or so, Lisa, we had a news conference with the Baltimore Fire Chief, James Wallace. A couple of headlines coming from that are worth sharing. Still an active search and rescue underway. Could go on for a long time. A large water area, subsurface and deck of ship still to be searched. They've been able to remove 2 people from the water. The latest information is they're looking for upwards of 7 individuals.
There are a number of things. The first thing is a total tragedy for anyone who is involved in this. Just on a larger scale, it raises questions about the infrastructure of the nation, especially if we're talking about air control safety and we're talking about bridges collapsing. I understand they're all one-offs, they're all anecdotes, but at a certain point you have to wonder when this raises questions about updating certain types of security infrastructure that would make the country more secure.
Also, the Baltimore Fire Chief is talking about they're not able to determine if there's an active fuel spill because of the darkness. So as we get into the later hours of the morning, they're going to be assessing this. And if there's a fuel spill, that's going to add to a lot more issues as well and what's going on in this crisis.
The message coming from Matt Scott this morning, thoughts with families, and the focus will be on the search and rescue, and I think that all resonates with all of us. Promising you regular updates on this story. We'll get another one in about 10 minutes' time with you, Hira. Look out for that. Let's start with the price action just briefly on the S&P 500. Equity futures on the S&P bouncing back by something like 0.4%. Yields a little bit lower by a basis point or two on a 10-year, 422.77. Coming up this hour, Julian Emmanuel of Evercore on whether the rally in stocks is different this time. Israel Strategic Affairs Minister Ron Dermer on growing tensions with the United States. And Megan Robson of BNP Paribas expecting a, quote, credit soft landing. We begin with the top story. Fed officials maintaining a cautious view on rate cuts ahead of a fresh dose of inflation data on Friday. Julian Emmanuel of Evercore ISI writing this: the phrase "it is different this time" is being heard everywhere, especially since the Fed has promised to cut rates from a position where the economy is not slowing. We do think that Friday's core PCE number could surprise to the upside, and a cut would get quickly priced out, and the market would respond with stock weakness. Julian, I'm pleased to say, is with us for more. Julian, good morning.
Good morning.
Good to see you, sir. In the exuberance zone, can you describe what that zone is and whether it's irrational or not?
It is not irrational, okay, because I think when we as investors think about history, we have to go back to the time where, frankly, having run money during that time, you knew there was irrationality in year 2000. That was 28 times earnings. We are at 23 times earnings now. The S&P, in our view, would have to get a lot closer to 6,000 to get to irrational. However, we are seeing signs of, the wall of worry having been completely dissolved, very aberrant behavior in the options markets, betting on stocks doubling in the course of 3 or 4 days, incredible. Betting on the NASDAQ rallying a further 33% out to June after already rallying 30% since the October low. All of these signs you see short interest being at decade lows. All of these things say that there is a feeling that the market isn't invincible. And when you think about the narrative of the last several months, where we walked back from 6 rate cuts to 3 rate cuts without the market, pausing for even a moment, you can understand why we're there. We think that the reaction to hotter inflation may be different.
You know what the comeback might be? Just because you found someone playing blackjack doesn't mean we're in Las Vegas, right? You can always find something like that.
You could redefine it.
You can find the gambling going on somewhere. That stuff always exists. What's new about this?
So what's new about this is that this phenomenon known as 0 days to expiration options really, in a lot of ways, is the equivalent of what we saw back in the late 1990s. It was called day trading then. Obviously, it's called high-frequency quantitative trading now. But the speculation that you can really cause to happen every single day, and we saw it in this earnings season, this last earnings season, and we're likely to see it again this earnings season, where you have these stocks that have enormous gaps to the upside and the downside because of the exuberance that really has no precedent in the options market.
Which raises the question, where is the reality check? Where is the gut check? You say it comes from, in some ways, the inflation data. It comes from Fed expectations. It comes from the bond market. What's the trigger, though, at a time where the market is hearing what the Fed is saying? And then some. They're hearing the rosiest picture that the Fed's going to let inflation come down very slowly, but that they will get it under control.
So when you have momentum of this kind of a strength, and we have to acknowledge that this is among the most record-setting periods of momentum that we've seen, there tends not to be a discrete trigger. The one thing we would point to is when you think about it, actually the month of April is sort of an outlier in that what you tend to see is sort of momentum reversals. And what we've looked at over the month of March is some of these momentum names have stalled. They haven't reversed, they've stalled. But when you're trying to feed that sort of exuberance, stalling is something that we take note of. And again, with this tendency turning the page to the second quarter, there is a potential, in our view, of momentum really taking a back seat.
How do some of the retail investors, the traders that use these options contracts that you were talking about, fit into the picture of how this will develop? Do you think that they increase the fragility of markets, or do you think that essentially they're just a feature of the moment that we're in?
Well, no, actually, and we said this when 0 days to expiration options first became, quote unquote, a thing, that we felt very highly convicted that it would suppress volatility. Because if you think about it, the casino is open from 9:30 to 4, and then you cash your chips in, and there's no overnight risk. Okay, and actually, as a professional investor, that gives you opportunities that you might not normally have, because when you're pushing the action on a day-to-day basis in this way, and you get these gap moves, if you're a disciplined buyer and seller of stocks, you get these opportunities to add to positions, to trim positions that actually increase the alpha and make this the environment that we're in of stock selection is also unlike anything we've seen, but a lot of this is driven by this constant exuberance that we see on the part of the public.
Can you talk to us about opportunities right now then? What are they?
So we continue to think that there is a likelihood of the economy slowing in the second half and into 2025. And when you think about it, some of these more defensive sectors that actually tend to do well in the period from the last hike to the first cut have lagged. They've had idiosyncratic issues. Healthcare, consumer staples, really sort of working off the GLP-1 phenomenon. We think there's a lot of value there. And there's also this entire subset of names whose valuations haven't moved out in the way the index has, that still have strong earnings. It's across sectors.
Can we get to healthcare? I'm pleased you brought it up. What am I buying when I buy healthcare? Is it just the GLP-1 thematic story? And some people might point to that as exuberant. What am I buying?
Well, so that's what held the rest of the sector back for the majority of last year. But when you look at it, right, there's this whole notion that we've started to see M&A activity come back because financing conditions have remained as favorable as they have, and that really points to, you know, the future in terms of biotech. Small cap biotech has done pretty well this year. We think there's a broadening, and of course, in this environment where the likelihood is that, you know, with a yield on some of these names, 4, 5, 6%, barbelling into some of the safer names, cash flow generators, make sense to us as well.
Interesting. Julian, thank you. It's good to see you, as always. Thank you, sir.
Thank you.
Julian Emanuel there of Evercore in the exuberance zone. Promised you a few times this morning, regular updates on the latest out of Baltimore every 30 minutes or so right here on Bloomberg Television. Here's your latest with your Bloomberg Brief. Here's Yahira Hackers. Hey, Yahira.
Hi, John. We begin with a warning. Some viewers may find these images disturbing. A search and rescue operation is underway in Baltimore after a container ship struck the Francis Scott Key commuter bridge, sending vehicles into the river. Emergency services say 2 people have been removed from the water.
We are still very much in an active search and rescue posture at this point, and we will continue to be for some time. There were likely multiple people on the bridge at the time of the collapse, and that, as a result, multiple people were in the water. We may be looking for upwards of 7 individuals. That's the latest information we have.
In an emailed statement, Maersk saying the container ship Dolly was operating under its charter. The White House says there is no indication of any nefarious intent. A Bloomberg News investigation has found examples of a growing black market for SpaceX's Starlink internet terminals. The access points have been popping up in territories ruled by repressive regimes, including Iran, Sudan, and Yemen, while Ukraine has accused Russian forces of also using the services. Elon Musk says the company isn't knowingly providing the terminals to any of these countries. And LA Dodgers star Shohei Ohtani says he's never bet on sports or used a bookmaker. The Japanese baseball player addressing media for the first time since allegations relating to his friend and interpreter surfaced. Ohtani says he only found out last week his interpreter had a gambling problem and was in debt, and that he never, quote, willfully sent money to a bookmaker. ESPN reported the interpreter racked up $4.5 million in gambling debts with wire transfers sent from Ohtani's bank account to the alleged bookmaker. That's your Bloomberg Brief. John?
Yahira, thank you. Up next on the program, President Biden closing the gap.
It's still March, obviously, and a lot can change. I think there'll be 4 or 5 momentum swings during this campaign, maybe even more.
That conversation up next. The latest poll out of Bloomberg Morning Console up next.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep reading World Cup. This is a three as the economic picture, covering the intersections of Hollywood, Silicon Valley, and beyond.
Equities on the S&P 500 positive here by 0.4%. Yields a little bit lower by a single basis point. The 10-year 423.16. Under surveillance this morning, President Biden closing the gap.
It's still March, obviously, and a lot can change. I think there'll be 4 or 5 momentum swings during this campaign, maybe even more. What Biden has going for him, though, is money. Believe it or not, the Democrats and Biden have far more money than the Republicans and Trump, and I think that will make a difference.
It's the latest this morning. President Biden gaining ground in 6 of 7 key swing states this month, according to the latest Bloomberg Morning Consult poll. Biden seeing his biggest gains in Pennsylvania and Wisconsin. The move following the president's State of the Union, which rallied Democrats. Joining us now is Bloomberg's Mario Parker in Washington. Mario, let's start with this story, then we'll move across to the latest out of Baltimore. Can you go through this poll and how it stacks up versus what we've heard in the last few months?
This is, while this poll shows that President Biden continues to trail former President Donald Trump, this is the brightest poll for President Biden so far to date. He's essentially gained ground in some of the crucial blue wall states that will be that he'll need for November, one of which is Wisconsin, where he's made up ground, covered about 4 percentage points to take a slight lead on former President Trump. Pennsylvania, he's competing there, essentially deadlocked, as well as Michigan. These 3 states are crucial. These are the bedrocks to President Biden's pathway toward the 270 electoral votes that he needs in November.
Mario, the president ended February with $71 million of cash on hand. The former president ended with $33.5 million of cash on hand. Biden has a huge advantage when it comes to money. Where's he putting that money?
That money, Emery, is going to those battleground states, and you're seeing the significance of that type of cash advantage right now. President Biden is essentially blitzing the airwaves in those key swing states. About 61% of the money that he has is going on the airwaves there. That's important for, at this point in the campaign cycle, at least the running television ads, right? Sometime deeper into the election cycle, it'll be important for putting people on the ground, knocking on doors, et cetera. This is a good position to be in for President Biden. Again, you're seeing just how he's able to kind of deploy those resources relative to former President Trump.
The other interesting point our poll finds is that actually taxing the rich is resonating among swing state voters. Is this something Biden's going to be leaning into?
Absolutely. You've heard President Biden say time and time again that he won't raise taxes on anyone making below $400,000 per year. Now, one thing as divergent as President Biden and former President Trump's policies are, there is this populist tint, right, that's gone through the political discourse. One of those things is essentially just having the rich pay their fair share, right? So that's one thing that you do see with bipartisan support.
Mario, I'd like to turn to the shocking pictures we all woke up to earlier on this morning, which appeared to show a ship colliding with a bridge in Baltimore. That bridge was the Francis Scott Key Bridge, collapsing in Baltimore following that collision. We've learned a few details in the last hour or so. One detail speaking to where that ship was coming from, chartered by Maersk, Mario. What else have we heard?
Yeah, well, right now, the great news so far is that 2 people have been recovered. One of those folks are in serious condition, but that is at least a bright spot so far, and this sad situation has developed overnight. That bridge, I've traveled across it time and time again, living out here in Washington, D.C. Just remarkable images to see it collapse in the way that it did. We're heading into, there's a couple of implications there. We're heading into Easter weekend, a busy thoroughfare up and down I-95, the East Coast. That'll that'll create some jams there. It's one of the biggest U.S. East Coast ports for light trucks and cars as well. So you'll see some type of economic impact there as well. The White House so far is engaged. They said that there's nothing nefarious at this point.
What can the White House, or what should they be doing, Mario? Is this something you think the president has to give an address about?
Yes, absolutely. I mean, this appears, again, at this point to have been an accident, right, with the ship colliding with a bridge. But we know that infrastructure is one of the key components of President Biden's platform. It's something that he speaks about all the time. He continually boasts about the ability of the U.S. manufacturing to rebuild infrastructure in a quick ways as well. And so, yes, we'll expect to see him there. He's close with Governor Wes Moore. He's one of Biden's top surrogates on the campaign trail. Of course, Baltimore is right here near D.C. also. So you'll see the president likely say something about this.
Mario, as we do try to recover everybody right now, that is where the focus is in the human story behind this. Going forward, there are going to be a lot of questions about what went wrong, whether this was traffic controllers in the channel that were not up to par, whether it was a miscued kind of communication. Do we have any knowledge at this point what went wrong here and whether it was a vulnerability in the bridge? I mean, how much of an issue is this?
We don't know just yet, so it's tough to speculate at this point as to what happened there, whether it was traffic control, whether it's just some type of mistake on the part of the ship captain and the crew there as well. The mass of that ship hitting, again, that bridge is something that was remarkable, and I think that's kind of what we've seen there.
The media focus, as you know, Mario, is going to be on search and rescue. Do we have any idea of the number of people involved, the number of organizations? Can you walk us through the current effort?
Yes, right now, at least so far, the Coast Guard is engaged again, and the great news is essentially that 2 people have been recovered. So you've got Pete Buttigieg, the Department of Transportation Secretary, has said that they'll have the full resources of the federal government. Governor Wes Moore of Maryland has declared a state of emergency to essentially marshal all the resources that state has as well for search and recovery.
Mario, appreciate the update, sir. Thank you very much. Mario Parker there on the latest on that bridge collapse in Baltimore. Lisa, of course, the focus of officials on the ground is going to be on search and rescue. Need to get a better understanding of the disruption caused, the number of ships that need to reroute, the kind of traffic that's going to be caused. Now, you can't use this key location point, this key travel point. And then beyond that, then you start to get into the what went wrong. What happened on this ship? What led to this collision?
And as we get into some of those questions, it really does become reminiscent of some of the other air traffic control issues and this whole focus on an aging infrastructure that a lot of people say hasn't been invested in. It reminds me of the ships and the shipbuilding that we've been hearing about, and the fact that the cranes that we have are imported from China because we don't build them.
Well, remember the supply bottleneck crisis. I was at this port with President Biden when he was talking about this. This is a massive port, incredibly important to the United States, especially the East Coast. And you're just going to see a huge, to Mario's point, Governor Wes Moore talking about a state of emergency. It's going to be a massive interagency response on the state and the federal level.
Another update coming to you in the next 20 minutes or so look out for that. Coming up on this program, the Israeli Prime Minister Benjamin Netanyahu cancelling a trip to the United States for senior officials. We'll be catching up with one of those officials. Ron Dermer is going to be joining us next. Lisa, plenty of questions on this one, because as far as the U.S. is concerned, nothing's changed. Why did you cancel this trip?
They might say that nothing has changed. The tone has shifted, though. And I think that anybody who doesn't see that would be a little bit disingenuous, because there has been a clear pushback to Israel's approach and sort of a question of the incursion in Rafah. To me, the question that I have is, at this point, how much are you depending on the U.S. for weapons, and how much do you really feel emboldened to pull away from the U.S. at a time that you rely on them?
It also could be international embarrassment, right? Netanyahu's office came out and said, we need you to veto this Security Council resolution when it comes up. And the United States said no. They didn't vote for it, they abstained. But this is something that Netanyahu says, well, then you know what? My officials are not going to be going to Washington. We should note, though, it was a suspended trip. So potentially maybe next week or the following weeks, they'll be coming to Washington.
That conversation up next. Sneak peek at the price action. Equity futures on the S&P 500 positive here by 0.4%. The S&P bouncing back from some very mild losses yesterday. Yields are lower this morning by a single basis point. The 10-year 4.2356. New price target over at Morgan Stanley in the last few weeks, looking for $90 on Brent crude. WTI this morning, $82.11. We're positive there by 0.2%. From New York City, this is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal?
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
Wow.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
Stocks bouncing back on the S&P 500, up 1/3%, up 0.4% on the Nasdaq. The Russell outperforming once again. We saw that on Fed Day, didn't we? Up 0.75% on the Russell 2000. In the bond market, 2-year, 10-year, 30-year, and a warning from Larry Fink of BlackRock. Yields 423.56, down a basis point this morning, down 3 on a 2-year to 459.51. The warning, Lisa, the warning is a snowballing debt pile in the United States of America that needs to be addressed by the boomers, apparently.
I'm wondering if you're trolling Larry Fink a little bit. You're saying there was a warning from him. Look at those yields; they're lower by 3 basis points. But basically, you know, we've been talking about this warning about the debt overhang and the deficit in the United States, and yet continually yields go lower despite some of these concerns being out there. So again, when does that come to the fore, given the fact that, yes, this has been something we've been talking about? people talking about a Liz Truss moment, but you know,
like, you know,
well, the Financial Times,
the front page of the FT.
Exactly, but to me, I mean, it's just going forward. When does it actually get reflected in yields?
It's an odd situation. There's a team over at JP Morgan. I remember the line. It was something like the boiling of the frog, right? The boiling of the frog, except the frog knows it's being boiled. That's kind of what's bizarre about this situation, right? Because we all know that it exists. We all know the trajectory is unsustainable, and here we are talking about the same thing still. What we don't know is where the line in the sand actually is. It's kind of like the frog is aware that the water's getting hotter, but ultimately it's not going to get out.
The frog being boiled, in my opinion, and based on what Larry McDonald just said, is the dollar. And ultimately, as long as the dollar is the reserve currency, the U.S. will have, in your words, the privilege to act recklessly. If you do start to get a weaker dollar, and you do start to say, just slowly, people pulling away from it, then maybe things could change.
Do you remember when we caught up with President Kashgari and asked him about this topic, and he said, want to kind of push back to it. Yes, yields have risen, and there might be concerns about supply, but it's hard to reconcile that with the dollar strength that we saw in the same period.
Which is the reason why people say game on, and yields continue to drop.
That's the story there. Under Savannah's this morning, a top story for you. Boeing shares rising in the pre-market, adding to yesterday's gains. The plane maker plotting a path forward without CEO Dave Calhoun. Dave Calhoun announcing he will step down at the end of the year after 3 of Boeing's largest U.S. customers reportedly asked the company's directors for a meeting to air concerns without the CEO present. AMH, you picked up on this story almost immediately yesterday. This is where things changed and changed quickly.
Yeah, because why would you go on a listening tour without the head of the company? It's because you want to complain about that individual. What I find interesting, though, is that they're giving him a long runway to the end of the year, which says to me they're trying to sort out a serious succession plan. We heard from Bloomberg Intelligence yesterday, which said this is someone that just doesn't need to know the financials. This needs to have an engineering mind, and it's a chance then, I think, for Boeing to reset.
That's the latest on Boeing. Here's the latest on China. US CEOs on a visit to China, extending their stay after receiving a last-minute invitation to a meeting with one of the country's top leaders. The CEOs of Pfizer, FedEx, and Amway are among those visiting for the China Development Forum, which ended yesterday. Bloomberg reporting the meeting is expected to be with President Xi, even though his name doesn't appear on any invitations. I guess it's just one of those things, Brammer, where you sort of know.
If you know, you know.
They're just sort of smoke signals coming out.
Right.
And have a Xi kind of feeling. At this point, I'm curious to see what they actually hear. Is it really the welcome carpet? Is it a more nuanced message? This just highlights how intertwined the two economies are, the U.S. and China, regardless of all of the noise. And U.S. corporate executives are pretty much on the forefront of that. Do they walk away? Do they pull back? Or do they double down, as we've heard a number of them, Qualcomm including, do, because this is the world's second biggest economy.
That's going to be one to watch in the next 24 hours or so. One to watch right now. Israel Prime Minister Benjamin Netanyahu's office cancelling a planned visit by senior aides to Washington. The decision coming after the U.S. abstained from voting a UN resolution demanding an immediate ceasefire in Gaza. One of the aides scheduled to visit the U.S. was Ron Dermer, the Israel Strategic Affairs Minister. He joins us now from Jerusalem. Minister, wonderful to catch up with you once again, sir. I want to begin our conversation, if we can, with a quote from John Kirby, the spokesperson for the U.S. National Security Council. And Minister, this is what he had to say. There's no reason for this to be seen as some sort of escalation. Nothing has changed about our policy, nothing. We still want to see a ceasefire. We still want to get hostages out. Minister, can we just begin with that line coming from the administration? What exactly do you believe has changed as they turn around and say nothing has?
Well, I believe their policy that has been pretty consistent, John, since the beginning of the war about 6 months ago, was to not accept a ceasefire that would be unconditional, and it would have to be connected to an agreement to release hostages. Unfortunately, in this text that was passed, those two issues were separated for the first time. In fact, 5 days before, there was a resolution that the United States put forward that was vetoed by China and Russia. And one of the reasons why they vetoed it is because it connected those two issues. And if you look at the text, and everyone can go see it on the UN website, and you look at the resolution 5 days ago, and you look at the resolution that passed yesterday, you'll see a huge difference. And unfortunately, that's a change in U.S. policy. Now, I'm glad to hear that John Kirby said it's not a change in U.S. policy, and I hope that they will continue to connect those two issues. But that's not the text of the resolution, and that's why Hamas celebrated the resolution and welcomed it. That's why Iran welcomed it. Believe me, any resolution by the UN Security Council that Hamas welcomes is not a good resolution for Israel.
Minister, you were due to travel yesterday evening. Could you share with us what you said to the administration directly after that decision?
Well, I spoke to them. I haven't spoken to them after that decision. I spoke to them before that decision. When we first learned about which direction this was going, I did on, I think it was Sunday night. And when I heard what was happening, I said, look, you're going to have, it's the wrong message at the wrong time. I explained to you why it was the wrong message, because it's not connecting the issue of a ceasefire with the return of the hostages. And why is it such bad timing? Because we had negotiators in Doha trying to get an agreement to release hostages. And it's not surprising that Hamas decided to reject the latest proposal that was put forward by the Americans. Because why? Why should they not reject it? They think they're going to get a ceasefire without giving up the hostages, because that's what the resolution said. And I understand and I appreciate that the United States has said that's not our policy, but that's not the text of the resolution. And that's the problem. And I told them before, if this would be the case, I would find it very difficult to believe that the Prime Minister would send a delegation to Washington. Why? Because the purpose of us going to Washington was to discuss and to actually listen to American ideas of how we should go into Rafah, the other ideas that they said they had without a major military operation in Rafah. What message, John, is it going to send to Hamas that the day after that the Americans separate these two issues and say, you know what, you can have a ceasefire without a hostage negotiations, and then the United States is presenting its proposal how we should not go into Rafah? That's a real big problem, and that's why the Prime Minister made the right decision to stop the delegation, which I was leading, to go to Washington.
Okay, so this trip was suspended. Is there any plans for you to come to Washington then in the future?
I don't know. We'll have to discuss it with the U.S. administration. We haven't had those discussions yet. I think the context here was particularly problematic. Obviously, the U.S. has ideas, and I'm sure they'll share it with us. I don't know if it'll be in a delegation in Washington, people coming here, us speaking over the phone, but they have ideas that they want to present to us. The president asked the Prime Minister of Israel to send a delegation so that we can hear their ideas. We have our defense minister in Washington now. I'm sure he's discussing this with them, but I think the timing was particularly problematic because of the message that this UN Security Council resolution was sending. It was a very, very bad message, both for the hostage negotiations, and also we have to be very clear with Hamas. We have to be very clear that we're going to fight this war until the end. And the last thing we want them to believe that the international pressure on Israel will get us to simply not finish the war. That's not going to happen. Now, I don't decide what the United States will do or won't do. They're a sovereign government. They'll have to make their own decisions. But Israel has to make clear to Hamas that we intend to fight this fight till the very end. And hopefully that pressure, their understanding that we're going to fight this to the end, will enable us to get to a hostage deal.
Well, the Israeli defense minister, as you say, is in Washington. We have Benjamin Netanyahu, the prime minister, approving a Rafah operation. But the Israeli defense minister said he had a good meeting with officials in Washington. Did anyone convince anyone on either side to change?
Well, look, we've been in discussions with the U.S. administration for a long time. The initial U.S. policy was essentially not that they're against an operation in Rafah full stop. What they said initially was that Israel has to make efforts to get the civilians out of harm's way and to ensure that humanitarian assistance can get to them. And guess what? We agree. And we've been working on a plan to get the civilians out of harm's way and to ramp up humanitarian assistance to them. So this is something where the two governments should be able to get to common ground and should be able to get on the same page. Now, if the position of the United States is there should not be a major military operation in Gaza, then we're not going to be on the same page, because we have to go in to Rafah. We have to finish the job. We have to take care of these 4 battalions. We can't leave 20% or 25% of the Hamas force in Gaza so they can simply reorganize and come back. And Israel's major military operations actually have enabled us to do much smaller operations and achieve great success. Look at what happened in Shifa Hospital. I don't know if you're following that, in the northern part of the Gaza Strip. We were there a few months ago and we did a major operation. Just now we went back last week, and we have done one of the most successful operations in Shifa Hospital in our history. Nearly 200 terrorists were killed there. Over 800 terrorists were captured, and there have been 0 civilian casualties. In fact, there have been more Israeli soldiers, too, who have died in that operation than civilian casualties. Why can we do that? And I think this is a very important point for your viewers to understand. Because once you do the major military operations, once you crush these battalions and defeat them, Israel has to come in with a much smaller force much more careful military operations and achieve great success. That's why it's so important for us to go to Rafah and to finish the job.
You keep saying fight this until the end. People have already talked about when you have people living in dire situations, people who've seen their loved ones being killed, that breeds extremist type of behavior, and you're already seeing that in certain places, that even if you kill Hamas, something else will come in its place because there isn't leadership and there isn't a sense of what the future is. How do you counter those types of discussions? How do you say there is an end that you have in sight?
Well, first of all, understand what we're trying to achieve. We're trying to destroy Hamas's military in Gaza. They're not a terror organization in Gaza. They're a military terror organization in Gaza. And we have to crush their military, and it's divided up into battalions. And we're doing that, I think, very well. But what you just said about it breeds extremism, I'd ask you, do you think that the action of the United States against the Nazis in Germany, do you think that bred extremism among Germans? Do you think the actions of the United States in Japan bred extremism? I mean, you were smart enough to, first of all, finish the job and win the war, and you demanded unconditional surrender to achieve it. And then you were smart enough to be magnanimous in victory and provide a different path for the future. But you have to finish the job. If you do not finish the job, the situation will actually be worse. You have to finish the job, defeat them, and then you can talk about a day after. Then we can talk about how we can expand peace in the region, what we should do in the long-term prospects of Israelis and Palestinians. But there will be no day after Hamas if Hamas is still there. That's why we have to finish the job.
I guess that one of the key questions that has been kind of hanging over this is we don't have a clear sense of how you provide that type of structure in any way when you don't have that being provided with respect to who's going to be the leader, with respect to who's going to provide the financing, with respect to even whether there'll be two states and what that will look like with certain land in the West Bank being seized. So how do you address those kinds of questions that do need to be put into place before you finish the job?
I don't believe they have to be put in place before you finish the job. In fact, I think just the opposite. I think if you try to put that in place now, you could actually undermine the effort to get to a real good day after plan afterwards. Because first, everybody has to understand that Hamas in Gaza is finished. Until they understand that, no one will step forward. So you're going to actually have a plan that's going to be stillborn. The second you win, that's the time when the international community, obviously led by the United States, Israel, Arab partners in the region, have to come in and say, okay, what do we do now? Now Hamas is defeated in Gaza. What is the next step? To think that anyone is going to emerge now, when you have 4 terrorist battalions of Hamas in Gaza, maybe around 15,000 terrorists fighting there, and that somebody is going to step forward, kidding themselves. We saw what happened in the northern part of the Gaza Strip when we try to work with local actors. Hamas took them out and executed them. That's what's going to happen until we finish the job. That's why I think it is in the interest of all countries who not only are interested in Israel's security, but interested in a better future for the Palestinians, to get Israel to finish the job as quickly as possible so we can move on to a day after. And the truth is, we have real partners in the region for that day after. I think the Saudis are a partner. I think the Emiratis are a partner. I think they are starting, and they've worked to de-radicalize their own societies. I think we need to look for them and to their leadership to see what we can do in a day after, and then we can talk about all of those political issues. But first, we have to get to a day after. We have to finish the job. You cannot leave that force in Gaza. It would be like, as one Israeli minister said, Minister Gantz, he said it would be like fighting 80% of a fire, leaving 20% of the fire, and simply hoping that it's not going to come back. Of course it'll come back. We have to douse these flames, and then we can talk about the day after.
Minister, I know we only have a few minutes left with you. I had a few direct questions to work through with you, if I may. The Vice President of the United States spoke over the weekend. Here's a quote from her. Any major military operation in Rafah would be a huge mistake. I'm not trying to understand from your side why you think that's not a mistake. I'm trying to understand now what the consequences would be if you cross that perceived red line now. Have they communicated what the consequences would be for Israel and the relationship between you and the United States? Have you heard anything whatsoever?
No, they haven't communicated that with us, but I can tell you, John, what the consequences will be if we don't go in and finish the job. It'll be that October 7th will happen again and again and again. People in the United States have to understand that the people of Israel see what happened on October 7th as an existential threat to the country. And I'll explain to you what I mean. It's not because I think Hamas can destroy the state of Israel. They cannot. But if we do not destroy the terror organization that did that on October 7th, if we do not take them out as a military organization in Gaza, then I truly believe that this country has no future, because all the buzzards who are circling around Israel and are looking to see what's going to happen to Hamas after they perpetrated that attack, they have to understand that Hamas is a terror organization in Gaza as a military is finished. You know, there are American officials. This happened a couple months ago. A senior official came and he said, you know, Hamas is an idea and you can't destroy an idea. And I countered by saying, you know, Nazism is an idea. And there are Nazis in Charlottesville walking around with tiki torches that they bought at Bed Bath & Beyond, but they don't have a state called Germany. ISIS is an idea. And there are people who follow ISIS. You saw the attack in Moscow just a few days ago. And there are black flags that are in bedrooms, probably not just in the Middle East, but in Europe and even places in the United States. But they don't have a state. They don't control the territory of a caliphate between Iraq and Syria. It is one thing to deal with a terror organization. It's another thing to deal with a military that is a terror group. That's a total different story, and we're going to dismantle Hamas's military regime in Gaza. It's going to happen. And I would like to have the United States by our side. They've been there for the last 5 months, 5.5 months, with critical support out of the gate. The moral clarity of the president calling a Hamas sheer evil, worse than ISIS. The fact that they sent aircraft carriers here. The fact that the president himself visited 10 days into the war when we could have had an escalation in the northern part with Hezbollah. So they've done very important things. And what I have implored them is to stand with Israel until the end, because we're going to achieve this victory. And I think it's not only in Israel's interest to achieve that victory, I think it's in America's interest to achieve that victory, because they've been part of this they've been part of this victory up until now, and now we're down the home stretch. I think stand with us, let us finish the job, and let's get to a day after where we can actually have a real peace process that can give hope, not just to Israelis, but also to Palestinians.
Minister, this is a conversation that you and I will have to continue that requires a heck of a lot more time than the 10 minutes we just had. Ron Dermer, thank you, sir, for joining us today, the Israel Strategic Affairs Minister. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahara Hakez. Hey, Yahara.
Hi, John. A massive search and rescue operation is underway in Baltimore this morning after a container ship struck the Key commuter bridge in the early hours. Emergency services say 2 people have been removed from the water. 1 was seriously injured.
We are still very much in an active search and rescue posture at this point, and we will continue to be for some time. There were likely multiple people on the bridge at the time of the collapse, and that, as a result, multiple people were in the water. We may be looking for upwards of 7 individuals. That's the latest information we have.
Maryland's Governor Wes Moore has declared a state of emergency. Traffic has been suspended around the area, with motorists advised to avoid the I-695 interstate. In a statement earlier this morning, Maersk said the container ship Dolly was operating under its charter. Baltimore ship traffic through the port has also been suspended as the rescue and cleanup operations continue. And Donald Trump is now among the world's 500 richest people. Trump's social media company wrapping up a multi-year merger process, giving the former president billions of dollars worth of shares. At the same time, a judge slashing the amount of a bond payment Trump owed by several $100 million. Trump's fortune had previously peaked at around $3.1 billion. His net worth now climbs to a new high of $6.5 billion. That's your Bloomberg Brief. John?
Yahara, thank you. The opening bell about 1 hour and 40 minutes away. Equity futures right now on the S&P 500. Near session highs, up about 1/3% on the S&P. Under surveillance this morning, tighter for longer.
Neutral for a while, but between 425, 450, we have been adding duration. We've been slowly adding to that duration position. Clearly, spreads are extremely tight, but one has to look for pockets of value wherever we can find them. Unusually and terribly tight, I'd say right now, on most of credit spreads.
Here's the latest this morning. U.S. corporate bond spreads at the tightest level in roughly 2 years, with a chance of tightening further as the Fed signals it's on track to start cutting rates. Megan Robson of BNP Paribas are expecting, quote, a credit soft landing, 2 to 3 rate cuts providing some relief for financing costs, while rates will still be high enough to encourage yield buying from investors. Megan, I'm pleased to say, is with us around the table. Megan, can you describe that? And good morning. Describe what is a credit soft landing.
Well, thank you for having me. So credit soft landing to us means we won't have
have a default or downgrade cycle and essentially skip the downturn phase of the cycle. And as you just described, we are seeing signals of a credit soft landing play out. And I think the Fed messaging last week, which we interpreted as very dovish, really reinforced that sentiment in the market that we can still get 3 rate cuts despite some of the hotter inflation data, which will continue to support credit markets both on a fundamental basis and on technicals.
Are we priced for a credit soft landing, or are we priced for a credit nirvana?
Well, with spreads at the tights, a lot of optimism is certainly priced in. We do think we've overshot our spread targets for the year, but we're relatively close to where those are. I think in April we are expecting the technicals to be very supportive, so potentially can grind further from here. But you know, the argument to buy credit from this point is not spread upside. It's really more of a carry story where you're buying credit to earn yield.
Which creates a really interesting question. Do you go into the higher quality debt that has pretty narrow spreads and don't get as much all-in yield? Or do you go to some of the riskier debt where all of a sudden companies might have less of a perfect soft landing given that they haven't yet really faced refinancing costs that are much higher than where they used to be? Is that the correct trade, to go down and to go into some of these riskier companies?
I think it really depends on the market. So in investment grade, we do like reaching into lower quality. So we have an overweight to triple Bs. Even though triple Bs have already outperformed, we think that you're still getting that pickup in carry and spread, and fundamentals look good. Within the high yield market, we think you have to be much more selective. So even though spreads are at 2-year tights, underneath the surface, you can see distressed ratio, or the number of bonds trading over 1,000 basis points, has climbed higher, and it's unusually high for this type of environment where people are so optimistic. So I think that tells you are seeing some of these issuers, lower quality, struggle.
So earlier this week, or actually last week, Bob Michael of JP Morgan Asset Management came on the show and said he's really changing his tune when it comes to investment grade debt, but also more broadly with respect to private credit and how much that's been sort of a stabilizer for the overall U.S. credit market. Do you agree that this is actually a source of stability, not necessarily a source of potential hidden risks that are out there that are sort of pocketing the landscape?
So I think private credit was a source of stability last year when syndicated public markets were closed, and it provided an avenue for some issuers that couldn't access high yield, traditional loans, that could actually borrow. This year, I think the story has changed where there's such a competition for capital that you really have started to see the competition between public markets and private markets drive credit spreads tighter, start to make covenants a little bit less strong. And unlike the past when you saw bilateral loans between one private lender and one issuer, now you're seeing it look much more similar to public markets where there's lending groups, including private and public lenders. And I think over time, you're going to see a convergence of those two markets, and it does create a bit of froth with pushing spreads tighter.
Megan, just getting some breaking news, so just got to run briefly. Megan Robson there of BNP Paribas. The latest from ABC News this morning on the major Baltimore bridge collapse. Getting some more details for you. If you are just tuning in, waking up to some tragic images coming out of Baltimore, the collapse of the Francis Scott Key Bridge following a collision with a ship. Learning more details in the last few hours about the nature of this collision. This from ABC, I'm quoting them directly. An unclassified cybersecurity and infrastructure security agency report said the container ship Dali lost propulsion as it was leaving port and warned Maryland officials of a possible collision. The crew notified officials that they had lost control. This report goes on to say that the vessel notified MD Department of Transportation, MDOT, that they had lost control of the vessel and a collision with the bridge was possible. The vessel then struck the bridge, causing a complete collapse. Just getting a little bit more color, AMH, in the last minute or so.
Yep, and there's reports also talking about the fact how this waterway into and out of the port has been closed. There's no other route into the port. Second biggest port in the mid-Atlantic. But ABC, looking at this unclassified cybersecurity infrastructure security agency, starts to show sort of the story of what went wrong. They actually alerted Maryland officials that this collision could possibly happen and that they actually lost control of this vessel.
Lisa, just getting more details in the last 5 minutes or so.
Yeah, I'm looking at this. It was 1:30 a.m., which is the one silverish or not terrible lining because there were fewer people that were on the bridge. But right now, the idea that there was a warning that they had lost propulsion, that they could potentially hit the bridge, It raises a lot of questions. What could have been done? Is this precedented? How do you just lose propulsion? How is this something that gets checked or not before leaving the dock? A lot of questions remain.
The latest from the White House, the president has been briefed. Biden to get updates on the bridge throughout today. More updates from us here at Bloomberg Television around about every 30 minutes or so. Coming up on this program, Peter Chi of Academy, Vijay Rakesh of Mizuho, Andrew Honhorst of Citi, and Robert Crandall, the former American Airlines CEO, breaking down his experience with Boeing, ultimately what changed in the last decade or so, and the pressure from airlines to make a change at the top of the company in the last week or so. That's the stage set for the next hour on Bloomberg Surveillance. Here's the price action for you on the S&P 500. Equity futures positive by 0.4%. Yields going nowhere. The 10-year 424.15. In foreign exchange, the euro just a little stronger against the dollar. Euro dollar 108.58.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, the electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
The top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we can start to see devices as early as this year.
Our job is to create index products, and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
fears that inflation really comes down even slower than I think it'll come down. I'm not anticipating a reacceleration.
We really don't see prices moving much higher than where they are today.